recording. Thank you very much, Megan. I appreciate that. As we have now come to find out at the start of all our meetings, I have a special announcement to read regarding AI. So if everyone would bear with me. The use of AI, any AI note taking, transcription, or summation tool is not permitted in today's meeting by any attendee, including members of the public. This restriction is in place until the state adopts formal policies governing the use of AI note taking, transcription, or summarization at public meetings of state boards, commissions, and councils. Thank you for your cooperation. Having said that, Cheryl, I'll turn it over to you.
All right, so the usual announcements this morning. You're joining this meeting via Zoom. This is a virtual meeting only. Please keep your line muted unless you're actively providing public comment. You can use the little microphone icon in the lower left-hand corner of your screen. Muting and unmuting in Zoom, you can just click that button on or off. If you're joining by telephone only, you'll need to use your phone features to mute or to raise hand. That's typically *6 to mute and unmute and *9 to raise your hand. You're welcome to use headphones as that can eliminate echo. Public comment or questions will be accepted by typing into the webinar as well as unmuting your phone and talking. To type into the webinar, you'll use the chat icon in the middle bottom part of your screen, and we'll keep an eye on those comments during today's meetings. If you're joining by conference call only, please send your name, title, and contact information to housing@mt.gov so we can capture that for the official minutes. Again, to housing@mt.gov. And for any public comments, please state your name and spell your last name and your organization so we have that information as well. Back to you, Chair Posey.
Thank you very much. We'll proceed now on to the introductions. I'm Bruce Posey, the board chair out of Billings. As you've been told already, Sheila Rice as well as Amber Parrish will not be joining us today. Jeanette?
Jeanette McKee, board member, Hamilton.
Thank you. Richard? I know you're out there, Richard.
He's on mute.
There.
Thank you, Richard.
All right. Richard Milstenberger, board member, Monarch, Montana.
Thank you, Richard. Rachel?
Morning, Rachel Arthur, board member, Great Falls.
Thank you. And Ryan?
Ryan Aiken, board member, Missoula.
Thank you very much. Those are the board members here and where they're from in attendance. And Cheryl, I'll turn it back over to you.
All right, I'll go ahead and introduce Board and Housing Division staff joining today's call. I'm Cheryl Cohen, Executive Director of the Board of Housing. Joining us today, and I'll include them as part of our partners, Nathan Bilyeu with Jackson Rideau and Grant, and Grace Berner with Jackson Rideau and Grant as well. We have Jessica Michael, Homeownership Programs Manager. We have Megan Sojourner, Administrative Supervisor. We have Jason Hansen, Multifamily Development Program Manager. Bruce Brensdell with the Multifamily Development Team. Joda Philippus, Operations Manager. Jesse Ennis, Mortgage Servicing Program Manager. Charlie Brown with the Homeownership Team. Vicki Bauer, Accounting and Finance Manager. Kelly Garigula with the Multifamily Development Team. Still scrolling here. Julie Flynn, Community Housing Programs Manager. Ryan Culver with the Multifamily Compliance Team. Jules Ingalls with the Community Housing Team, and Ashley Miller, Accounting and Finance Supervisor. Have I missed any board or Commerce Housing Division staff? Okay, and I'll turn it over to Joe to read through the members of the public and stakeholders joining today's call.
Sure. Bear with me. We got quite a few people on the line right now, 67. So let's see here. Mike Gaffina, Alex Burkhalter, Alex Tim, Andrew Shanania, Andrew Connell, Austin Trunkel, Becky Brandborg, Benjamin Ulick. Let's see, keep scrolling here. Chase Huber, Cheryl McNatt, Cole Harden, Deanna Langman, Don Sturhan, Drew Page, Jean Luer, Grant Schnell, Holly Doty, Heather McMillan, Jared Ackerman, Jeff Riggs, Jim Atchison, excuse me, Joshua Revius, Carissa Trio, Katie Fairbanks, Kayla Fox, Larry Phillips, Liz Mogstad, Liz Stotts, Logan Anderson, Lori Lottis, Matt Bells, Matthew Rohrbach, Melanie Brock, Mike Robinson, Mike Spar, Mina Chu and Misty Dalkey, Parker Webb, Patrick Zhang. I'm sorry if I introduced the partners previously or if Cheryl did. Paul Keenan, Ross Butcher, Sarah Hudson, Shane Walk, Teresa Domit, Tyler Currents, and Virginia Duke. And I see that there was about 5 more that hopped on while I was scrolling and just seeing if I can find them here. Kayla Fox, Katie Fairbanks, Jeff Riggs. I believe I'm missing, Jackie Gerard. And I believe Cole Harden, and I believe that is it. If there's anyone that I missed on the general public, can you please say your name? If you didn't hear it.
Heather McMillan with Homeward.
I got you, Heather. All right. I believe that's it, Chair Posey.
Thank you very much, Joe.
Yep.
It now comes the time for public comment on any public matter that is not on the agenda and that is within the jurisdiction of this agency. Do we have any public comment at this time?
Seeing none, Chair Posey.
Thank you very much, Joe. That being the case, we'll move on to the meat of our meeting. And then we'll start off by looking at the minutes of May 12th, 2026 board meeting. Board members, you've all had this in your packet. You've had a chance to review it. Are there any board comments and or questions regarding these minutes?
I would move that the minutes be accepted as presented.
I appreciate that, Richard. Are there any public comments before I ask for a second?
Seeing none, Chair Posey.
Thank you. May I have a second to Richard's motion for approval, please?
Jeanette will second.
Thank you very much, Jeanette. It's been moved and seconded for the approval of the May 12th, 2026 board meeting minutes. All in favor, please say aye. Aye.
Aye.
Opposed, same sign. Motion carries. Jessica, homeownership program, over to you.
Yes, it seems to be the Jessica and Jason show today. So I'm up to bat first. First thing on my list is the income limit approval. The board's administrative rules require that each June or at other times as necessary, the board is to review, establish, and revise income limits for lower income persons and families in need of housing assistance under the board programs. In Revenue Procedure 2026-23, the Internal Revenue Service provided permanent safe harbor income limit guidance for single-family mortgage revenue bonds and mortgage credit certificates by referencing the income numbers released annually by the U.S. Department of Housing and Urban Development. On May 1st, 2026, HUD released its income limits for 2026. To determine the board's income limits, we have the option of either using 2025 or 2026 HUD income numbers and the option of applying the high cost area adjustment. Staff reviewed the calculations and determined that using 2026 data would allow us to assist more borrowers. The new income limits are attached for the board members to review. The board has the option of setting program limits at or below the safe harbor limits. Staff recommend that the board approve the attached income limits. And if you look at the chart, just a quick overview, most places went, the increase was about 4%. There was a couple of areas where it was 5 to 10%, but most were 4. Only one area went in the negative, and it was by 1%, and that was Gallatin County.
Okay, thank you very much, Jessica.
Mhm.
Do we have any board questions and or comments regarding these income limits? Do we have any public comments or questions regarding these income limits?
Mike Gofina, did you have a public comment or did you just come off mute? Okay, and see.
Okay, hearing none, may I have a motion and a second for approval of the income limits as presented by Jessica?
Jeanette moves.
Thank you, Jeanette. May I have a second?
I'll second. This is
Thank you
Rachel.
very much. Thank you, Rachel. It's been moved and seconded for the approval of the minutes as present, or as the income limits as presented. All in favor, please say aye.
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 Opposed, same sign. Motion carries. Back to you, Jessica.
Next is the purchase price limit review with option to change. On May 6, 2026, the Internal Revenue Service released Revenue Procedure 2026-23 containing safe harbor numbers to be used in establishing purchase price limits for mortgage loans financed with tax-exempt mortgage revenue bonds. The purchase price limits for our program are determined by multiplying the safe harbor limits by 0.9 for non-targeted areas and 1.1 for targeted areas. The new purchase price limits are attached for the board's review. The purchase price limit in most counties increased by 4%, while 6 counties had less of an increase at 1%. Mineral County had the largest increase at 15%, and Gallatin County decreased by -1%. These changes are due to the housing cost to income ratio increasing or decreasing in those counties. The board is not required to approve the purchase price limits for our programs. However, they do have the option to set limits lower than safe harbor limits presented. Given the high home prices throughout the state, staff recommend using the limits as presented to assist as many home buyers as possible.
Okay, thank you, Jessica. So the question to the board, does anyone wish to change these income limits as presented and as approved by HUD? Any comments from the board relative to that? Otherwise, these will be the approved limits. As Jessica indicated, we don't need a motion for this particular issue.
Good work, Jessica. Thank you.
Lots of math.
Well, I can remember when these were like 70 grand. But we've gone up a little. Do we have any public comments relative to these new limits or questions?
Seeing none, Chair Posey.
Thank you, Joe. That being the case, Jessica, these will be our new limits. Thank you, public and board. And Jessica, back to you for our discussion on habitat.
So next is the Habitat for Humanity set-aside request, I believe. Hey, the state of Montana Habitat for Humanity affiliates request an annual allocation of set-aside funds each fiscal year. At the end of the fiscal year, June 30th, any unused portion of the allocation expires. In July 2025, the board approved a final $3,966,000 set-aside allocation for Habitat affiliates. As of May 12th, 2026, with loans in process, Habitat affiliates have used $2,050,000 $496.20, leaving a balance of about 1.9 million that will expire in June 30th, 2026. Board staff convened meetings with Habitat for Humanity affiliates on November 18th, 2025 and February 12th, 2026 to discuss their programs and any potential changes, including partnering with community land trusts, new developmental opportunities, and how MBOH can best partner with Habitat for Humanity affiliates going forward. Mary Beth Morand, Executive Director of Habitat of Flathead County and the current Habitat for Humanity Affiliates Board Liaison, has requested set aside funds for fiscal year 2027 in the amount of $8,432,360 with an expiration date of June 30th, 2027. Breakdown by county: Missoula is looking to do 2 homes at 500,000. Billings is looking at 3 homes for 702,000. Kalispell and Flathead is looking at 6 homes on a CLT and 4 additional townhomes for almost 3 million. Hamilton, Ravalli County has 4 homes at 925,000. Helena, 5 townhomes at 1.2 million. Belgrade Bozeman, 3 homes at a little over $1 million. Butte, 3 homes at 777,600, and then the Libby Kootenai, 1 home at 240,000. And I just wanted to continue on by giving a little more information on a couple of those. Flathead Habitat for Humanity is requesting that the board grandfather the rate of 6 homes in a community land trust at the rate of 2%, as they have already received applications and partnership agreements from potential borrowers using this lower rate. The Libby Habitat for Humanity is requesting their set aside of $240,000 for a property they own and are rehabilitating for a new Habitat borrower. The purchase price of the home is $205,000 and construction costs of approximately $35,000. The home needs new flooring, light fixtures, doors, windows, interior trim throughout, new kitchen cabinets, paint, interior and exterior, gutter installation, and both bathrooms completely redone, including drywall. The new family will be earning sweat equity by working on their home. Staff had determined that there are adequate funds available and requests that the board approve this Habitat for Humanity fiscal year 2027 set-aside allocation in the amount of $8,432,360.
Thank you, Jessica. Okay. Questions from the board? Okay. I have a variety. First off, Habitat is now requesting 3 times what they requested last year and 4 times what they used. And they still only have a year to use it. My own opinion, that's not very likely. That's a lot. And so why request it now? That's my first question. Who can answer that?
That would be to Mary Beth Morand, I believe, if she's on.
So I need to know, you're really going to get all that built in 1 year. Otherwise, there's no point in us doing this.
Right.
I do not see Mary Beth on.
Okay.
Second,
Sorry, Bruce.
go ahead if you're going to say something, Jessica.
Oh, no, I go with what the liaison says that she got from each of the Habitat areas. It does seem very aggressive. On the other hand, we know that costs are going up, so asking for more money is going to go up. I did bring to staff and Cheryl and Vicky about how much more it was this year, and we all kind of stepped back and said, "Whoa, that's quite a bit," but this is where we're at.
Okay. My second question is, from what I can see, they're trying to lock in the 2% on an ongoing basis for community land trusts in the Flathead. And so if they want, I am fully opposed to giving them 2% on these 6 homes. They're on community land trusts, they're community land trusts. So I personally cannot agree to the 2%. And I believe it would appear to me that they want that much money so they can lock these 6 homes on an ongoing basis.
Just these 6 homes is what they have agreed to, is these 6 homes, and then it's done.
Yeah, but that could take them 3 years. And so I am not going to, I for one, if we vote on this, will not agree to the 2%. It will fall under whatever we decide CLTs are going to be at. But that has to be decided yet.
That's the next agenda item.
So my next question is, first off, are there other board comments on this 2%?
I'm wondering if we should take this agenda item. I guess I should ask for recognition, Chair Posey. The next agenda item is going to be covering the percentage. I'm wondering if we should just kind of push this till after that agenda item.
And I have no problem doing that.
But
This is Jeanette. Jessica, are you able to get Marianne on the phone at some point here? I think that might be useful.
Jessica, I can send an email to Mary Beth right now and see if
Okay.
Mary Beth, I'm sorry,
Okay.
Mary Beth, sorry. I think that would be helpful.
I invited her to the meeting as well as the Missoula Habitat.
So while we're doing that, my next question is, if I read the Libby request, it's 240. They own the property.
They're buying,
What?
yeah, they're getting reimbursed the 205, I think, for the property.
Yeah, so all we're doing is giving Habitat $205,000 by virtue of this.
Right. And then, then the contractors or whoever gets paid the 35 for the improvements.
Once again, I don't know I'm prepared to make a decision on that. They've bought a house. I don't know what they paid for the house. We don't know what they owe anything on the house. And are they simply trying to put money in their pocket? I'm not going to blame them if that's the case. I just don't know if that's the position we're in and something we should be doing.
Let's see. Robert Reeves. I talked to him.
email to Mary Beth is out. Chair Posey, would you be comfortable if Jessica then pivots to the CLT Habitat agenda item and then we come back to this one potentially?
Absolutely.
Okay.
Here we go. Something that we've been working on I just looked at it about a year now. Goodness gracious, how time flies. Proposed set-aside program additions and modifications, Community Land Trust and Habitat for Humanity homes with Community Land Trust. This proposal outlines additions and modifications to the board's set-aside programs, including establishing a new broad Community Land Trust set-aside program and a new set-aside for Habitat for Humanity homes held in Community Land Trust. These proposals are put forth to position these programs to best serve eligible Montana homebuyers and the Montana Board of Housing in a financially sustainable manner. On May 30th, 2025, the board received a request to establish a new CLT set-aside program. The request was to expand the current set-aside rate for Northwest Montana Kalispell CLT and Montana Street Home CLT to include all CLTs in Montana. See Exhibit A, which you received last month as well. On September 17th, 2025, board received an updated request to establish a community land trust set aside in the amount of $3,336,000 at the same 2% rate as the Habitat for Humanity set aside rate. See Exhibits B and C. Again, those are the same exhibits you got last month. Staff reviewed potential rate options for CLT set aside internally and with our finance team. At the October strategic planning session, board staff approved a color of money and a history of board policies and evolution of set-asides trainings for board staff. Both trainings were intended to inform and prepare board members to consider future set-aside requests and the board's financial position to fulfill such requests. Board staff met with CLT affiliates on November 5th, 2025 to discuss their set-aside request and solicit feedback on our current CLT loan terms and conditions. On November 18th, 2025, board staff met with Habitat for Humanity affiliates to discuss the current set-aside program and requested input of any changes that may be needed to the existing terms and conditions. We also solicited their feedback on a combined Habitat for and CLT home set-aside program. A combined meeting with both Habitat for Humanity and CLT affiliates was held with board staff on February 12, 2026. On April 13th, 2026, staff presented a summary from all the Habitat for Humanity and CLT discussions to the board and solicited board members' insight as the direction they would like to see for these proposed set-aside additions and modifications. MBOH recognizes the need for innovative financing structures and programs, including Habitat and CLT models, to lower the purchase price of homes to be within reach of the lower and moderate income homebuyers our programs are designed to serve. Staff also acknowledge the importance of offering differentiated rates for programs which provide additional public benefit. Under the Habitat model, borrowers continue sweat equity in the home construction, reducing total development costs to ensure the affordable purchase price. Under the CLT model, homes constructed or otherwise placed in a land trust create a continuously affordable stock of homes that are available to lower and moderate income homebuyers when current homeowner vacates. Over the last 3 years, Habitat for Humanity affiliates have submitted funding requests totaling $10.67 million to the board to support Habitat qualified homebuyers with a 2% interest rate under the board's established Habitat set-aside. During the same period, MBOH purchased 32 Habitat mortgage loans representing an investment of just over $6 million. Over the last 3 years, the board has purchased 44 loans in a CLT for just over $10 million. 6 of the CLT homes were combined with Habitat for Humanity. Then I have a summary of current Habitat and CLTs. There we go. Now we're up to date. So currently we have a CLT option 1 and an option 2. Option 1 must meet the MBOH purchase price limits and LTV over 80% and has to be insured by FHA, VA, HUD, or 184. And that's rate is equal to the regular bond rate. CLT option 2 does not have the government insurance. The LTV still has to be under 80%, still has to meet published purchase price limits, and the rate for that currently is 0.25 above the regular bond rate. And we also have an existing CLT set-asides, CAP Northwest, Montana, Kalispell Community Land Trust, and Montana Street Homes. Must meet the income limits, serve the borrowers that are 80% of area median income and below, and the rates at 0.25 below the regular bond rate. Then there's the Habitat for Humanity, which we've talked about quite extensively, where it's a 2% interest rate, and Habitat does a wraparound second and possibly a third, and we went over that extensively last time. Let me know if you have any questions about that. The new set-aside proposals, Community Land Trust, we're just going to put them all together as Community Land Trust, and our proposal is it may be accessed by all Montana CLTs, must meet published MBOH income limits. The LTV has to be under 80% for the first, that's with MBOH, won't be government insured. The underwriting requirements, it must meet Fannie Mae DU approve eligible. Appraisals must meet Fannie Mae CLT requirements and will align with the board's standard set-aside rate at 0.25% less than the MBOH regular bond loan program, which is currently 5.125. Habitat for Humanity loans with a CLT must meet established income limits, not limited to 80% AMI under historic habitat set-aside. The underwriting requirements are still Fannie Mae approve eligible. The appraisal still must meet Fannie Mae CLT requirements. The standard set-aside rate is 0.25 below the MBOH regular bond program rate. The proposed Habitat with a CLT rate is 0.50% less than the MBOH regular bond rate. And the regular bond rate, as we've said, is 5.375, so that would make this 5.125. the set-aside rate is 5.125. This would make the proposed habitat with a CLT set-aside rate being 4.875. The above proposed rates with estimated loan production figures have discussed internally with our finance team. It was determined that the above rates are financially feasible with a sustainable for the board. Under the proposed structures, options utilizing CLTs would be purchased by our master servicer, Idaho Housing and Finance Association, pooled into an MBS, delivered to Fannie Mae, with the MBS being purchased by MBOH to hold as an investment. Standalone habitat loans without any CLT may continue to be boarded to the MBOH's in-house portfolio. So to wrap that up, the proposal is staff requests the board approve the above changes, including establishing a new, broader community land trust set aside at 0.25 below the regular bond rate, and the addition of a Habitat for Humanity homes in a community land trust at 0.50% below the regular bond program rate. If approved, board staff will make the necessary program updates, including drafting and publishing new terms and conditions with interest rates specified for each program.
Take a breath.
Have a slip of coffee.
Okay, so first off, board questions or discussions?
So Jessica, you alluded to, you didn't allude to, you read on 4/13/26. You submitted the summary and I'm just reading my little notes here and such and solicited board insights. I'll be really frank. I actually don't know how we responded at that time. Can you refresh my mind as to what we all said, or somebody that else is on the call?
Yeah, there was quite a bit of discussion, not a lot. I remember it ended with Chair Posey saying a CLT is a CLT. That stuck in my mind. Forever stuck.
Very good.
Good job. So, okay,
Sorry.
go, please, Ryan.
I was just going to say, my recollection was that Bruce had some concerns about whether this was truly benefiting the home buyer rather than the developer primarily. So if Bruce has some new insights on that, I would love to hear them.
Thank
Or
you.
anybody else for that matter.
Yeah, one of my concerns was that, and it's been told to me that the lease payment, for lack of a better word, on this land, I wanted to make sure that that lease payment was still part of the 30% max of their income.
And
Now, I was told
sorry,
I was correct. Is that not correct, Jessica?
yes, it is included, and it goes from anywhere between the CLTs that are in Montana, anywhere from $25 to $50 a month. And I'm told that that is included.
Okay. So that was my big concern, that lease payment was getting passed on and they were in fact paying for it. That answer your question, Ryan?
Yes, thank you.
Okay. So my concern here is, I think, as Jessica put it, CLTs are CLTs. And I don't see any point in taking another quarter off for Habitat. Most of these CLTs pay no property taxes. One of the things with home ownership is the payment of property taxes. You become a citizen, you pay property taxes, that pays for schools, at least in this state. And most of these people getting Habitat are family people. This is a good deal. But they have kids. They should be like any other homeowner. Okay, under the CLTs, if they've been approved, not necessarily by us, but by the state, many times they do not pay property taxes. So why would we give Habitat yet another break when in fact they're getting a break by virtue of going into a CLT and not having to pay property taxes? No one's paying property taxes. So I think
Sorry, Bruce Posey.
All CLTs, I think, should just have the same price. I think we create complications by changing things. We ought to have a standardized program. That's my 2 bits.
I reached out to all the CLTs, and half of them have tax exemption for the property taxes, and half of them do not.
And the Habitat people are still only having to pay 30% of whatever their income is, or whatever that decision is amongst them. And I like your proposal, Jessica, because we can move this entire product to Idaho, which is a really good idea. They're our master servicer. They should take on as much as they possibly can of our product. So that part is a very good idea. And if my
Question.
calculations are right, the payment differential on a 0.25%, $17. That's on 100 grand.
So 200 grand would be $34.
Yeah, if it's 200 grand, it'd be 34 bucks. But they're only paying
68 on 400.
but they're only paying the 30% regardless.
Mhm.
We're gonna have a vote. You guys don't have to vote with me. We're gonna have a vote, but I'm just looking for comments and thoughts on this.
Chair Posey.
Bruce,
go ahead,
I'm
Jeanette.
sorry, Rick, go ahead. Go ahead.
Go ahead,
I'm still kind of flummoxed, confused at the special treatment for Habitat for Humanity. And as I may have mentioned at the last meeting, I've been a big supporter of Habitat since the 80s. Anyhow, I love the work they do, but I'm just trying to get my head around why the most favored nation kind of treatment of Habitat. And I do appreciate your comment, Chair Posey, on the issue of the exemption from the property tax. I think that could build up over time, kind of resentment actually in a community. So we're trying to pull people up and into, trying to create a sense of permanent dependency. And I do have concerns about the ongoing property tax exemption, but that's kind of a different question. I'd say the main thing I'm still trying to figure out is how it is that, we have lots of nonprofits we're dealing with in this space. Habitat for Humanity is a terrific one, but I'm not sure why the special treatment. Does anybody have a history, quick thumbnail of why?
That would be a Vicky Bauer, I think. She knows all the history.
Yeah, I was trying to
She went over
get
it, I think
unmuted.
it's last time, but we need a refresher.
Yeah.
Yeah, so Habitat typically would work with banks and have loans originated at 0%. They had always offered a 0% rate because the borrowers that they're working with are like 30 to 50% area median income. At some point in the past, Habitat came to the board because it became harder and harder, I believe, for them to find a financing mechanism for those mortgages. So they came to the board and they asked the board to purchase 0% mortgages from lending banks to give them a funding source. And so we did 0% mortgages for some time. And then I can't remember what year it was. At some point, it was determined that the board shouldn't do 0% mortgages. So we moved to a 2% mortgage product for Habitats. And we do this wraparound program that all of the affiliates worked with. And those were fee simple loans, fee simple properties that we were lending on at 2%. Now, over the years, as the Community Land Trust program became more abundant throughout the state, the Habitats began working with the CLTs in order to secure properties that build more permanent affordability. Because what would happen with those market rate or with those fee simple properties is there was a deed restriction or Habitats usually had first right of refusal for buying those properties if the borrower wanted to sell them or if it went into foreclosure, and then the Habitats would put it back into their inventory. But sometimes that only lasted like 10 years. So eventually those homes would go back out on the market at market price. So to build a more permanent affordability, they started using the community land trust model. But the relationship changed with that community land trust model. And so that's where we're at now, because it feels like the Habitats are acting more like a developer than an organization that is helping these borrowers, to put it quite bluntly. So now we've devised this option. We wanted to keep the 2% rate because that's the board's approved rate for the Habitat affiliates that aren't working with the CLTs. And then Jessica and team came up with these other options for when there's a community land trust in the mix.
Thank you. No more questions.
Other questions from the board?
I guess I have a follow-up question to Richard's. Are there other similarly situated organizations to Habitat that have applied or requested a similar type of set aside, or do we have a process for reviewing those sorts of applications?
So the other set asides that the board has done is where the affiliates or the organizations are using like home funds where there's a restriction to 80% area median income. We allow that, and that's our regular set aside program, where it's 0.25% below the regular lending rate. I can think of one other program over the years. It was I believe it was in Belgrade. It was a condo project where they needed, they were catering to, lending to 50% area median income because they were using NSP funds, which is a federal program from years past. And we offered a lower than the set aside rate for those borrowers. But we really haven't gotten requests for rates comparable to what's being requested here, like from Habitat.
Other board questions? Well, one of my comments.
Vicki,
Go ahead.
I'm sorry, Bruce. This is Jeanette again. So Vicki, Jessica, both, maybe, or Vicki, since you're talking. I mean, this is putting you in a vise into truth. If I say to you, which is, you've heard Bruce's comments and concerns. Are you? I mean, I am going to put you in a bad situation, I think. But I guess this is what you do. But are you still concerned that this is the right way to go? Do you guys feel that this is? I mean, that's exactly what I'm doing. I want to hear if you've changed your minds in any bit listening to this. Vicki, you can go first.
Yeah, so I think for me, Habitat tends to work with borrowers who are lower than 80% of area median income. Over the years, we have seen even their income levels creep up, because even at 2%, the purchase prices, the cost of everything has increased so much that folks at that 30% area median income, I think they have a hard time qualifying those borrowers too. So we have seen some creep on that income level up to where it's more closer to the 80%, maybe 60%. So it's closer to a regular set aside. And then it bears the question about what others have asked, is it fair to continue to give Habitat this low interest rate? I guess the only difference too with that is the Habitat program, they participate in the build. It is a different program than some of those others where the others are just qualifying a borrower for a market house. You know, they're building a house or they're rehabbing a house and the borrower is actually putting in the work. So for me personally, I think that having a concession or special program for Habitat is worth it, just because of the work that they do with the borrowers that are utilizing their program.
Thanks very much. I appreciate that insight.
I don't have too much to add to that. I want to stay with the Habitat, we call it the legacy program with the 2% and the wraparound and having that property be on fee simple, keeping that where it is. What I didn't want to do is recommend, which was at the beginning of this whole process a year ago, was recommended to give all habitats, even with a CLT 2%. And I had a hard time with that. Just because it's not fee simple land, it's leased land. And yet on the other hand, we're trying to get people into homes like Vicki was talking about, people that can't afford. And through all the discussions, and like I brought up last month, when we had this discussion, the Habitat people were fine and agreeable to having the rate be quite a bit higher than 2% if they involved a CLT. So we are giving them 0.5% lower than our regular bond rate. And that's a little bit lower than our standard set aside rate. That's community land trusts are a new thing that we're all discovering, you know, what's the ins and outs and what happens when things go sideways. And I think we're giving people the opportunity while not giving them too much.
Thank you.
This is Cheryl. I just add, and I dropped it in the chat, but I think it was a good note that the Community Land Trust approached us. There has been some, I think, confusion with the two very specific CLT set-asides that we've had already. One is the Northwest Montana Kalispell Community Land Trust, and the other is the Montana Street Home CLT. Sometimes there's confusion with lenders or partners where they thought that because they have a CLT, it could go into one of these very, very specific CLT set-asides that the board previously approved. So to me, the proposal to establish a broader CLT set-aside at the same quarter point below that aligns with the existing CAP Northwest and Montana Street Homes, it's creating a level playing field for all CLTs and eliminating some market confusion with the products and set-asides that we're offering. I think the benefit, as Vicki and Jessica both mentioned with Habitat, is there's the sweat equity component, and so I see that as an additional public benefit of the program. And same with CLTs, it's establishing affordable homes in perpetuity, so that is an additional public benefit. So when I think about how we're putting forth a policy parameters, I try to think about both what's in the best interest of the borrowers we're trying to serve, particularly the lower income borrowers that these programs would benefit. And what was really positive that I heard from one of the affiliates when we met was if a borrower could make it in a conventional loan product or with a regular Govy insured product, they're not going to necessarily recommend that they go into a CLT product. This is really intended for borrowers that otherwise would not have the ability to enter into the homeownership space. And even though it may seem like a decision that some of us maybe wouldn't make to live in a CLT, for those borrowers, the alternative is living in a rental home where they don't have predictability on when is their rent going to increase, how much is their rent going to increase, are they going to be displaced, or are they going to need to move out of their school district? And so to me, having that additional public benefit, so households that are trying to enter into homeownership have stability for themselves and their families. I think there's strong public benefit to be had there. So those are just my 2 cents. I really take Bruce Posey's comment about property taxes seriously. I think there is a potential for market impacts related to that, and that may be something for the CLT affiliates to consider when they're making a decision about applying for that tax exemption.
Other comments? Well, I have one other that strikes me about. I have no problem with setting up a standard CLT. The fact it's a quarter less, that's fine. My issue is having Habitat is something different than any other CLT house. But when we do a Habitat house at 2%, they're buying their house, they're buying their land, they're participating in the American dream, and they get their appreciation, they get to do what they do. When you do the CLT, and quite honestly, Franklin Roosevelt tried this. This is not necessarily new. He tried this clear back in the 30s. We're creating a type of socialism where we're not doing, where capitalism doesn't necessarily work, because we're not allowing you to sell it for that higher price. We're not allowing you to take all the money. I understand why. I'm not arguing that. But that's why I see the Habitat, the 2 is substantially different than the Habitat and the CLT. I see them as 2 different programs. Once again, I think a CLT should be a CLT. If we're going to do it, we're going to have a set aside, fine. But it should all be the same. There shouldn't be any difference. That's my last of my 2 bits on this. Any other board comment before I go to the public?
Yeah, I'll just say that, I appreciate all the concerns that have been expressed, but I would echo Jessica's sentiment that at the end of the day, our job is to put people in affordable housing. And if this is going to make a difference for certain people who otherwise wouldn't have an opportunity, then I would support it.
Any other board comments? Okay, hearing none, do we have any public comments or questions regarding this proposal?
Just waiting, Chair Posey. I saw someone come off on mute, but it doesn't look like it. So seeing none, Chair Posey.
Okay, that being the case, we have a proposal from the staff that, and I will read it. The staff requests the board approve the above changes, including a new broader community land trust set at 0.25% below the regular bond loan rate. And in addition, a Habitat for Humanity homes in a community land trust at 0.5% below the regular loan bond rate. And they've requested approval. They have a motion and the second for approval of this proposal.
This is Ryan. I'll move to approve.
Ryan has moved.
This is Jeanette. I will second.
Second. It's been moved and seconded. All in favor, please say aye.
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 Opposed, same sign. Chairman says no. Motion carries. Okay. Jessica, I assume that takes us now back to Habitat.
Yes, I'd love to put these things to bed, but we will do what we will do, and we will do it well, whatever it is that we do. You sound like a Dr. Seuss, don't I? I'm assuming you don't need me to read it again.
No, so the issue here is outside of the $8 million being requested, there's 2 or 3 issues. One issue is Flathead would like to stay with 2% in the CLTs.
Just for those 6, yes.
Or 6.
Yes.
And I think that's the first discussion to have in this. We've just approved CLTs at 0.5 below, except if you're in the Flathead, and they would like for their next 6 to be at 2%. Which obviously, I'm opposed to. They should just be in the CLTs. Any board comments on this?
We do have two Missoula homes that are closing at the end of June that are in a CLT, and they're taking the 2%. But that's the only two that they have, and they're closing by the end of the month. Just as a sidebar knowledge.
It would seem to me we could do nothing other than honor that. They're headed for closing.
Yeah, they're already locked, so.
Yeah.
It's my understanding.
But Jessica, let me ask you this question. But at 2%, these two homes at 2% in the CLT, we're going to have to service those, correct? They cannot go to Idaho.
Yes, that's correct.
So part of this whole deal is to start to move this product toward Idaho,
Mm-hmm. Yes,
like this CLT product.
yes. And I am bringing to you the proposal as it was proposed to me by the Habitat affiliates.
And I'm certainly understanding what they're trying to do. But the two in Missoula, they're part of the old $4 million, correct?
Yeah.
Is this going to be within their fiscal or our commitment year, correct?
2026.
That's all part of it.
Yeah,
So that is not really relevant to this discussion.
correct. I just was
This
letting you know
discussion
that that
goes,
was
yeah,
gonna happen.
this one goes forward.
Yes.
Any board comments or questions?
This is Rachel.
Yes, Rachel.
I guess being new to the board, I don't know what the historical amounts that were requested. So I guess I'm having a hard time making a recommendation. So I don't know if you have any of the historical numbers that you could send me or email me or.
I know I have it. Let me go into my Excel. I have the ones that I've been privy to, which would be the last 2 or 3 years.
Okay.
I know you guys don't know me very well, but I made a spreadsheet, which is incredible.
Well, and to a certain extent, outside, we're setting aside money that we can't use for other things. And the staff indicates we have the money. So if they don't use it, we get that money back, correct, Jessica, at the end of the year?
Yes.
And so it's money that didn't go to anything, but maybe wouldn't have gone to anything. And your question is correct, Rachel. This is a much larger increase, much larger request than ever. So I don't know if it's the amount that's the issue here. It's the issue that we have two issues, in my opinion. We have an affiliate who wishes not to follow the CLTs for their next 6 homes. That's one issue. And two, I still like to know what's going on with the Libby deal. You know, did they get this house for free and now want to feather their pocket? I'm not saying that's wrong. I'm just not sure that's our position.
So while Jessica's looking for by fiscal year breakdown, we included in the summary of the other agenda item that over the last 3 years, the Habitat for Humanity affiliates requested a total of $10.67 million under the Habitat set aside at the 2% rate. And during that same 3-year period, we purchased 32 Habitat loans for just over $6 million. So historically, they've asked more in the 3.5, maybe $4 million per fiscal year. They haven't used that allocation, and this one is substantially higher than the last several fiscal years. But yes, they have not historically used all of it, and it just goes back into our agency funds.
If you have a piece of paper, I can run down some numbers really quick for you. In 2024, they asked for 3.3 million. I'm rounding. They used 1.6. 2025, they asked for almost 3 million. They used 1.8. 2026, they asked for almost 4 million. They used 2 million. This year they're
So,
asking for 8.3.
board chair,
Yes,
I guess this is probably a learning curve for me, but why would Habitat apply for more than what they're using? Is that just a what if type of situation?
That seems to be their mode is we think we're going to get all these houses done and then maybe something happens during construction
Okay.
or
I have personally put up money for 3 builds in Billings number of years ago, so it wasn't near the cost structure you have here. I personally know the church I attend put up 100 grand for the 100th home in Billings, all donated by people. These homes take a while to build. They're a house. You don't build unless you do some sort of fast build. You build a house in 4 to 6 months, particularly when you're using Habitat people to build. If I go to Kalispell, and not to pick on them, but if you go to Kalispell, they're talking 10 homes, 6 and 4, 10 homes. They're not going to build 10 homes this year. And that's a lot. There's contractors that won't build 10 homes in the Flathead this year. So, yeah, I think one of the big issues here, they want to lock in the 2% money. They don't want to follow the CLT. They want these 6 to be exempt from it. I understand why. I just don't think that's fair. I think if they're going to be, we just approve the CLT, they ought to be CLTs, period. So I think, Rachel, that's one of the reasons you're seeing this big increase. Maybe not all, but part of it. To get 4 townhomes built, again, that's not an easy deal to do when your labor is the homeowner. Just doesn't happen. I was a long time construction leader, so that's my 2 bits.
if you
I would
want to
really
know,
like to hear from somebody at Habitat. Cheryl, have you had any luck getting through to Maria?
I have not received a response from Mary Beth, and I've been kind of looking at the attendee list. And yeah, when we flag for public comment, I'm not seeing any Habitat or CLT affiliates on the call. We did communicate this meeting with all of those partners in advance.
Well, then, as board chair,
Oh,
may
as
I make,
Matt Rozbowski, sorry if I butchered your last name, is here for the Missoula Habitat.
Matt, do you have anything to say?
I do actually. Of course, I can't speak for the other habitats, but I have been listening to the discussion about the community land trust and the funding for those, and I can tell you for the Missoula habitat, our struggle here is finding affordable lots to do our projects. As the cost of land has gone up, we partner with community land trusts just to try and take that cost out of our project. And I want to thank the board actually for approving us for our projects that are underway, that are on the Community Land Trust at the 2%. 2 of those families, one is a single dad, head of household, were able to get the project done for him having a mortgage amount of $180,000. One of the other families is a single mom, head of household. We're able to get that project done for $150,000 mortgage. There are no other options for some of those families. So thank you very much for supporting that. Chairman Posey, I do agree with a lot of your thinking on community land trusts and how they're different from deeded ground. For the Missoula habitat, our struggle is trying to find that deeded ground. And if we can take the cost of an $80,000 lot out of the equation through a land trust, that helps us.
And I appreciate that. And I happen to agree with that. I don't have understand why it's done, and I happen to agree with that concept. The issue here is not we've in my mind we've settled the land trust issue and what we're going to charge Habitat. What the interest rate's going to be. Charge is not the proper word. What the interest rate will be. And what the interest rates are going to be in land trust. And I understand that in many communities, the price of a lot, if you have to buy it, is outrageous, relative to a habitat program. Fully understand that. The point that I'm trying to get at here is that I think it's pretty clear that land trust is land trust. And therefore we've made our decision, and that this idea that we should exempt 6 houses and that they need all this money. Well, in fact, they've never used all the money, typically used only half of it anyway. I'm not understanding. Jessica, we have a commitment Habitat that goes till June 30th. We have set aside that we were committed to till June 30th, correct?
Yes.
Okay. And do you know of any Habitat houses closing in the month of July?
There's one in Missoula. They have the third townhome, or there's one other property in Missoula that asked if they could put that money and use the money from fiscal year 2026. And since we have so much left over in 2026, and I know that they're closing in July, instead of when the other 2 are closing June 30th, I told them that was fine to close that one, but I did not promise them the 2% rate on that property.
Okay. But that's on a land trust as well, correct?
Yes. Missoula
Well,
seems to be, they just had their board meeting and they're going to continue to work with community land trusts. Billings is not, Bozeman is not, Helena is not right now. I mean, I'm looking at the ones that they gave me on their chart for fiscal year 2027. So I can tell you those aren't. And the Libby one, you asked about that. I have an email right here in front of me from April 27th, and I can quote Robert Reeves saying, "For our rehab, we purchased a home that was in poor repair with the intention to correct issues and place our selected family in early fall." And then he gives the scope of all the things I told you they wanted to fix on the home. They've already started the demo phase, and the bones of the house looks great. So yes, it is a house that they built. So to me, that $205,000 would be to pay them back.
okay. And again, there's other questions relative to what this whole project's costing.
35,000 sounds like quite a low number considering all the stuff they want to have fixed, but it's their proposal.
Okay. My thought process based upon that question then, because we don't have other Habitat, Mary Beth in this case, Mary Beth, correct?
Yes.
Yes.
On the line. We don't have answers to, I don't have answers to this 205,000 going back to the Libby Habitat. I would personally like to push this over into July so we can get some answers. I do happen to find it a little inexcusable that the main Habitat is not on the line today. And they have a request in. I find it a little inexcusable that Libby's not on the line. They have a request. Things happen. We have board members couldn't make it today. I understand. But is there any board heartburn about pushing this discussion off to July when we know we only have one house closing in July that would be affected, and Jessica's already given the approval for the funds from last year to be used for that house?
No, I agree.
Go ahead, Ryan. Go ahead, Ryan.
Just saying, I agree with Chair Posey on that.
And I was just going to ask Jessica, is there anything, are there any negative consequences by leaving this till July?
Not that I can think about the top of my head. Vicky, can you think of any? Cheryl? I can't think of any. We're still gonna close the two that we're gonna close in June. It's already a deal.
And
I
you've
don't-
given approval to the third, and I'm fine with it.
I just want to know your specific questions so that I can give you specific answers.
Well, I expect at the board meeting for them to be on this line to answer those questions.
Okay, so you want Mary Beth and Libby
Yes.
and possibly Missoula again?
And yeah, it's a public meeting.
Yeah,
Anyone can be on it.
I'll send it out to him. I'll send it out to him. We need you on this.
Chair Posey, would you also like us to have an amount for Flathead Habitat for Humanity that excludes the 6 homes in a CLT? Right now, their amount requested is the 6 houses with the CLT that they want to grandfather in at the 2% plus 4 townhouses. Do you want us to work with them to tease out those 2 amounts so the board has those separated?
The more more information we have, Cheryl, the better. Thank you very much for that suggestion. Yes.
Okay.
And
We've just had a note from Matt. I think everybody maybe saw it that he's asking about Missoula now. I think that this could be an issue for him. I think we should respond to his question or ask him to get back on the line.
Yeah.
I'm sorry, what was the question for Missoula?
It was just to be on the line. We really didn't have a question for Missoula. We appreciate you being on the line today. You're closing 2 houses in June, and that's going to fall under the old allocation.
Okay.
And Jessica has indicated that she's already approved, not rate-wise, but she's approved the allocation to fall back into the 26 allocation. So we really don't have a question along those lines, other than we appreciate you being on the line.
Okay. All right. Thank you. Okay.
We look forward to seeing you next month.
Okay. Thanks.
And
Okay.
board chair, just so we can have a clear record, if we are going to push this off, could we get a motion to table this discussion item with a second and then a board vote?
Motion to table.
Thank you, Richard. May I have a second?
Second.
I'll second.
Yeah, Rachel, take Rachel's.
Rachel seconded. Nathan, you read my mind. I was going to call on you. So it's been moved and seconded to table this particular motion until July meeting. All in favor, please say aye.
Aye.
Aye. Opposed, same sign. Motion carries. Jessica, I guess we are now down to your dashboard.
I'll try to make it brief. Some of the numbers, like the RAM numbers and the Idaho numbers, are still from April due to the cutoff for the board packet. At the time that I did this, there was $4 million left in 2025B. Now there is no money left in 2025B. We just started funding 2026A. No, that was 2026A. Sorry. I get my years messed up with my fiscal years. We're starting the new bond. We haven't closed it yet, but we have started bridging loans to that this last week. We had, almost 8 million loans purchased by Idaho last month. Delinquencies seem to be going down a little bit. We've funded over 185 loans between first and seconds this year alone. Rates are unchanged. I don't see any reason to change rates. And the portfolio is going down as it's supposed to. Little by little, not a lot. And then, yeah, that's it, because I already gave you the new updated delinquency foreclosure rates for the nation and the region last month. So not too much new. Does anybody have any questions?
Do we have any board questions for Jessica on her dashboard and her update? Do we have any public questions or comments for Jessica? on her dashboard and her update?
Seeing none, Chair Posey.
Thank you very much. That being the case, Jessica, you can relax. Thank you very much. And good work on everything that the staff has done on all what you discussed today. Don't want to suggest that my disagreement is not any indication of not appreciating all your work you've done.
Thank you.
On to the mortgage servicing program, and Jesse.
All righty. Thank you, Mr. Chair. So just a quick servicing dashboard update for the month of May. We had a total of 5,759 loans in our portfolio. Total principal balance on those loans is hovering right around $675 million. Our lost draft account just dipped below $800,000. We moved the needle on delinquent loans that are 60 or more days. Those dipped down to 65, which they've been kind of hovering over 200 every month. So that's good to see. We had one foreclosure sale in the month of May. We paid off 48 loans and onboarded one new loan. And then I do have a quick update on our tier ranking system from HUD. We just got our updated score late last week, and pleased to announce we moved the needle up to a grade C. So moving in the right direction there. To go over some loss mitigation stats, we got one borrower in a trial payment plan as of the month of May, 8 preservation properties, 3 REO properties, and we had 2 short sales in the month of May. We currently have 25 foreclosures initiated. Total principal on those loans are right around $3.5 million. And we currently have 16 sales scheduled. And that wraps up the dashboard.
Board questions for Jesse. Jesse, are all of our REO properties RD properties?
Two of the 3 are. Yep.
What is the other one?
It's NFHA 1 that we have over in Billings right now.
Okay. All right. The portfolio is going down, which we expect it to, but with inflation and that, probably not a huge runoff in a hurry. How many of these servicing loans currently, if I recall right, are there 44 Habitat loans in our portfolio?
I don't have that exact number, but it's kind of in that ballpark.
Okay.
Yeah.
All right. And how many? Yeah, it's not relevant. I'll look it up. So I won't. We have a long meeting today. I'll look up what my question is. Okay. Do we have any other board questions for Jesse or comments? Do we have any public questions or comments for Jesse on his mortgage servicing report?
Seeing none, Chair Posey.
Thank you very much, Joe. Jesse, you got awful lot easier than Jessica did.
I sure did. Thank you.
Thank you very much. We'll now move on to the operations and executive director's report. It looks to me like maybe Cheryl, you're going to start this.
I sure am. So first we're going to start with the rental assistance dashboard, and my video is queuing up. It's just taking a while on my screen. So if we start here at the top for totals, so we have all wait lists. The change on our wait list is we increased by 975 households on the waiting list. On the Housing Choice Voucher Program, we increased by nearly 60 the number of households that are leased up. And you can see our month of April, it was nearly 3.5 million that were paid to landlords for housing assistance payments. Veteran Affairs Supportive Housing, we have nearly leased up all of those tenant-based HUD-VASH units, and we're definitely going to have a little party here at the office when we get all of those leased up, but the VA has been a great partner over the last number of months referring new households to us. For the Legacy Moderate Rehabilitation Program, we just have 37 paid units. For mainstream vouchers that serve non-elderly persons with disabilities, we have 17 currently leased. And go ahead and scroll down a little bit. And we'll cover project-based VASH. So this is the Fort Harrison, Freedom's Path at Fort Harrison. We do have now just one unit, I believe, that is not leased up there. So that is a huge push there. The EHV, or Emergency Housing Voucher Program, all of those remaining households will be transitioned to the Straight Housing Choice Voucher Program by the end of this month. That was a one-time only ARPA program. For the project-based Section 8 portfolio, we still have 85 projects, a little over 3,600 units, and nearly $3 million paid to landlords last month, or the month of April. For the 811 project rental assistance, we just have 2 contracts left with 13 units. And we're now in the process of changing from the original 5-year demonstration project to annual contracts with HUD. And finally, on the rental assistance waiting lists, you can see the change as the waiting lists have grown. We are likely going to do a waitlist purge this fall, maybe starting in the month of August. Because our allocations from HUD, they'd gone up to 31 million. It looks like they're going back down to about 25, 26 million. So in reviewing our 2-year cash management tool, we made a decision over the last couple of weeks to cease issuing tenant-based vouchers. We're not closing the wait list. People are still welcome to apply, but we're not issuing any new vouchers as we're kind of skating up against our budget authority at the federal level. Which is a bummer. But we're waiting to hear if HUD's going to further offset our reserves or if we'll have that full 25, 26 million to make sure that we can budget that for the rest of the year. And if I'll happy to take any questions about rental assistance if you guys have them.
Does the board have any questions for Cheryl regarding her report on rental assistance? Any public comments or questions for this part of Cheryl's report on rental assistance?
Seeing none, Chair Posey.
Thank you very much, Joe. That being the case, we'll move on. You're next.
Yeah, great. So the next board meeting will be held Monday, July 20th, via Zoom again. So we'll see you all there at the next one. Some board member opportunities. The 10 City Roadshow this summer. If you'd like to attend that, the details are down below there, about 3 pages down below. If you have something that in your area that you want to attend, get a hold of Cheryl. Love to see you guys there. Also, the 2026 NCSHA Annual Conference, that'll be held in Detroit this year from October 3rd to the 6th. Registration is not yet open. But board members are encouraged to attend. And as soon as the registration does open, we'll send out an email with the registration link and everything for you guys. Contracts and procurement, quite a few here. We started up with Claims and Recovery Financial Services, which is a CRFS that was executed mid-May. It'll assist mortgage servicing with post-foreclosure, preliminary, and loss MIT claim services. And it'll also assist the new team member in various post foreclosure processes. So look forward to that. That'll be a short-term contract, but looking forward to their training and know-how. Housing and Development Services, that is HDS, that is upstairs, utilized by our Section 8 folks. The software, there's 2 of those contracts. One is for hosting and one is for maintenance and licensing. That one was executed. The other one is routing through right now for execution. Dalton Appraisal Service, that's used by our project-based Section 8 team. That was renewed for another year. These appraisal services, oh gosh, let me see. The appraisal services, they provide the rent comparability studies directed by HUD for those PBS 8 contracts. We also have Frontier Strategies. That's Dan Drislane, who's been helping MBOH as our consultant for the current software RFP. We had to extend that out a few more months just because the RFP hit the street late. So we're not paying him any more money, but we are just extending his contract out just so he can be part of the RFP evaluation as a subject matter expert. So, and then Eide Bailey, they assist with the prep of the board's financial statements. That was renewed for another year too. And we also just had another one renew. That was QTAC Rock. They are bond counsel for us too, and that was executed here last Friday. So that was just done here too. Couple of personnel updates. Lisa Carlin, who was previously under my guise as a quality control, she was QC for mortgage servicing, but she accepted that risk mitigation specialist in mortgage servicing under Jesse. And she will begin in her new position here on today, actually. So congratulations to Lisa. And Logan Kohlberg, who is our executive assistant, she's on vacation today, but she's going to be heading for brighter future on her behalf because she's going to prep for admission to law school at the University of Washington. And her job has been posted, I believe, as of Thursday or Friday. So we are in the recruiting stages for her position. So fingers crossed that we get someone really good for Cheryl and myself and Megan to help out with a lot of the executive assistant functions that happens. So in essence, that's all I have. Chair Posey, if anyone has any questions for me before we move on to Homeowner Assistant Fund.
Are there any questions for Joe and his report from the board? Are there any questions from the general public for Joe on his report?
And seeing none, Chair Posey, thank you.
Very good. Then Cheryl, I will move back to you in homeowners assistance.
All right, so the ARPA Homeowners Assistance Fund, over 4,200 applications have been submitted by the end of May. They've expended $33 million on all programs. They hired a temporary hire for home repairs, and she started in late May. They also accepting reinstatement and lien prevention applications through the end of July, and then the program's going to be closed down to new applicants for staff to process the submitted applications before the program closes on June 30th. Scrolling down to the community housing team, the HUD has not announced our housing trust fund allocation yet. Still waiting anxiously for that. We have our draft 2025 Consolidated Annual Performance Evaluation Report, also known as the CAPER, is available for public comment now through June 12th. And a public hearing is scheduled for this Wednesday, June 10th. We're also working on the 2026 Annual Action Plan, which will be available for public comment mid-June and a public hearing on July 9th. The Annual Action Plan is proposing $2.5 million in home, $1.5 million in CDBG, and $2.7 million in Housing Trust Fund to be made available for multifamily development or preservation and to address homelessness. We also have an additional $200,000 in home funds proposed to be used for down payment assistance. The home HTF and CDBG housing applications will be due September 15th. And we have suspended the CDBG housing stabilization program because all funds are earmarked for single family rehab activities have been awarded. We'll continue with accepting applications again in 2026 when funds become available in the fall. Many thanks to board members who attended the Montana Housing Partnership Conference at Fairmont Hot Springs a couple of weeks ago. We co-hosted with NeighborWorks Montana another successful conference. We did get some initial survey results back and held a little debrief to discuss. So happy to pause here or maybe just as I end, if any board members or staff would like to share any takeaways. Also sharing that the Commerce Director, Marta Bertolio, myself, and Julie Flynn attended the Manor's grand reopening on Thursday, the 28th. The Manor's a project-based Section 8 property serving low-income seniors in Hamilton. And it was a really great event. Manor needed a lot of work, and I've included a lengthier summary here. We also put out a social media post, but the residents were all extremely happy with the rehab. Turner Renovation, a local contractor, did the work and just got glowing reviews in budget, on time. So congratulations to all of those partners. For upcoming tasks and activities, we're working to finalize our internal control plan by the end of this month. And Vicky's also working with iBailey on their financial statements to align with some new GASB requirements. We're still working on some 508 compliance and some things on our website, with our internal deadline being October 30th of this year. And do I have anything else to report? Yes, so the roadshow, just a regular plug. I know Sheila said she'd attend in Great Falls, but if any board members would like to join for any of those, just let me know. I'll make sure that we've got a place for you. So I'm happy to, if we want to skip talking about the conference, because I know we have a lot of partners on the call that are probably anxious to get to the competitive loan program cycle. But here's a picture of our steering committee post-conference for all of you guys. So that's all I have. Happy to take any questions or any info shares from the conference if board members would like to.
So first off, any questions for Cheryl from the board and or from the public?
Seeing none from the public, Chair Posey.
Thank you, and hearing none from the board. My one observation is that it was a very good conference with very good speakers, well attended, enthusiastic crowd. I couldn't say more good about it, quite honestly. I was very impressed. So, Cheryl and your group, you did a fabulous job. So thank you.
Thank you.
Okay. That being the case, we're now going to head to our multifamily program. We have been at this an hour and a half. I suggest we take a 10-minute break. In fact, let's make it 10:15 since it's about 10:02 or 10:03 right now. Let's come back at 10:15 and we will get going on the presentations for the Go Housing monies that all the rest of the people have been waiting to speak. So let's reconvene here at 10:15, please. Thank you.
We did do some of the older coal trust ones at like 95% loan to value. So we have done a few, but and true, the first round of the 6, there's 5 of the 6 that will be loan only. The rest of them later will all be tax associated with tax credits.
Yep. So that's just a concern I have. But we're recording, so let's go ahead and get started again. We're going to get to the multifamily. I've been asking a question of Jason, and I just want the board to understand what this process is before we go into it. And my question was, we're approving a slate. What happens after that? And Jason, would you like to go through that again for the whole board, please?
Yep. So today we're approving the slate. So we'll have some that don't get funded at first. So the first ones will get funded. The slate will be if somebody backs out. So today we'll approve the slate. They will come in then with their full application, with their appraisals and everything else. And then staff, as long as it meets the thresholds, meets our underwriting guidelines and so forth, then they are approved at that time. Say someone is associated with a 9% that gets voted on in October and they don't make it through, then it will be the next one up on the slate that will come through.
Okay. Now, that having been said, we've re-adjourned the meeting, and I think I'm going to start off with you, Jason, however you want to start. And then before we start the actual presentations, I have a comment or two. So go ahead.
Thank you, Mr. Chair. So we'll go through the dashboard, and we'll go through the waiver for Skyview, and then it'll be on to the projects to vote on today. So to start with is the multifamily dashboard, the update. Just wanted to update everybody. Rocky Mountain Flats did close last month. That's the biggest bond deal we've ever done. We had like $65-ish million, 64 in bonds, roughly $45 million in tax credits. So that was a $100 million deal on our part. So that's 296 units to be built in Bozeman. So that one did take a while, as most of them are taking a while in Bozeman right now. They're big ones. So that did get closed. So that was good news. So you will see on the dashboard here the monies and the buckets. That was what's going to be used on the vote today to determine how much money we have to loan out in each bucket. And the project's underway. Nothing's really changed on that. You'll see the ones that are approved in review and the ones that are actually incoming. So any questions on the dashboard?
Any board questions on the dashboard? Hearing none, any public question on the dashboard?
Seeing none, Chair Posey.
Thank you very much. Okay, Jason, back to you then.
All right, the next one is a unit reduction waiver for Skyview and Billings. So Skyview Apartments, if you remember, in October of 24, it got a partial award during the 9% round. Initially, it was $6.5 million. They received roughly $4.7 million. Following the award, the development team was required to substantially rework their project and come in for approval again. At that time, they reworked it. They had $1 million they were getting in home funds from the city, but they needed to switch lots. So they lost that $1 million in home funds from the city. So they restructured the report in construction anticipation starting this year in the summer. They've got it with a new site and so forth. Their unit, it's now planned to be an 18-unit project, down from 26 units, utilizing the average income set aside with 7 one-bedroom units, 11 two-bedroom units. Project will consist of 3 two-story buildings, an 8-plex, a 6-plex, and a 4-plex. Unit costs will be roughly $388,000 per unit, which is up from roughly $349,000. So one thing I wanted to touch on and make sure everybody understood was credits per unit. So the credits per unit now would be roughly the same as what it would have been if they got the full $6.5 million. So reducing it to 18, but also reducing to $4.7 million in total credits, they're coming in about the same credits per unit they would have been getting if they got a full allocation. So staff supports the unit reduction waiver proposed noted above. Skyview is still within the qualified allocation plan. A cost per unit limitations, and the cost per unit increase has not exceeded the 20%. So no waivers are needed in the cost per unit increase.
Okay. Do we have any board questions for Jason? Am I correct in assuming, Jason, that the going from roughly 349 to 388 is partly due to the reduction in units, because that soft cost would have got spread out over a greater number of units? Would that be correct?
Correct, Mr. Chair. I would, yeah, a lot of it's economies of scale. You just can't get enough units divided into the lot prices, attorney prices, and all the other soft costs. So correct.
Okay, that's what I thought. Other board questions or comments? Do we have any public questions or comments?
Seeing none, Chair Posey.
Thank you very much, Joe. And that being the case, may I have a motion to approve the restructure project and reduction in units from 26 to 18? And this would be, it's still called Skyview, correct, Jason?
Correct, Mr. Chair.
So moved.
Thank you, Richard. May I have a second?
Second.
Thank you, Brian. It's been moved and seconded. All in favor, please say aye. Aye.
Aye.
Opposed, same sign. Motion carries. Jason, back to you in the big lift for today.
Okay, well, this starts off the process for the competitive round. Mr. Chair, did you say you had a question though you wanted to ask before we got started, or after?
No,
you've read?
I have a couple comments to make before we get into the actual presentations. You answered the question how we go from here. I just wanted the board to understand that.
All right. So the process today, the board will review projects and approve projects by the loan type of the projects they applied for. The first slate's going to be will be the Go Housing Multifamily Homes Program, the formerly known Cole Trust Multifamily Homes Program. And then after that round, we will then go into the Go Housing Montana Fund, along with the MBOH Housing Montana Fund and the MBOH Multifamily Loan Program. Loan applications will be reviewed in the order that they were randomly selected. If you want to go down a little bit, Megan, there to the bottom of that page and the next. So presentations and reviews of projects applying for loans will consist of the following. The applicant will have no more than 5 minutes to summarize and point out highlights of their projects. The board will have time to ask questions. Members of the public will have time to make comments, and public comments will be allowed not only during each project review, but at the beginning and end of this process. The board chair may implement a time limit for public comments at his discretion, and members of the public are asked to refrain from repeating comments already made on the record. Before I go through the rest of this, Mr. Chair, would we like to discuss, so after 4 minutes, Joe's going to keep time, so he'll give a 1 minute warning, and after it hits the 5 minutes, how would you like to proceed? Would we like it muted, or would we like you to be in charge of that?
I'll be in charge of that. I would ask, though, when you're told you have a minute left, please respect that. We know this issue is important to everybody, but we have limited amounts of time, and we have public comment. I will also exercise restriction on public comment if we keep getting the same comment. I believe fully in public comment, but we need to have some sort of balance here. So please keep that in mind. We appreciate everyone's cooperation.
Okay, Mr. Chair, so the board selection, each board member will be asked to list their top applicants as follows. So the first round, each board member will list their top 3 projects that will get 2 points. The next 2 projects will get 1 point. This will provide a tally that will assist the board in developing a slate of projects to be funded. Then after all that's done, we'll go on to the next round, which includes all 3 again, the Go Housing HMF, the MBOH HMF, and the MBOH MFLP. Each board member there will then list their top 4 projects that will get 3 points. The next 3 projects get 2, and the last 3 projects will get 1 point. And this will then assist the board in developing a slate of projects to be funded in that round. The board will review the following criteria when considering loan approval. The applicant's experience in managing and developing housing for low and or moderate income households, percentage of units in the project that will be available for low or moderate income households, the need for low and moderate income housing in the community, the priority of the board's proposed lien in relation to the amount of the loan, and the priority of liens and the amounts of the loans of the lenders on the project location, the loan size and whether it maximizes the geographical distribution of the loan programs, the use of other funds to leverage the use of board funds, and the following categories will be used for consideration in funding decisions. These are the 5 we typically talk about. On the tax credit side, it includes the income levels targeted, the project efficiency, location considerations, geographical distribution, and community contributions. Now, with that, I wanted to make some notes. When considering the above 5 categories for selecting projects, board members will keep in mind that this competitive loan application process is not the same as comparing projects in the 9% housing credit round that we did last month. The QAP notes the board's alignment with IRS guidance stating MBOH board gives preference to projects serving the lowest income tenants through a combination of income targeting requirements and application evaluation process. Under this competitive loan application round, we are comparing projects that have only loans with no housing credits to projects that have loans with housing credits. Projects with housing credits will typically be able to have deeper income targeting than projects without housing credits. In the QAP, we have requirements that 9% housing credits projects maintain income targeting at 53% area median income or lower versus 4% housing credits at 60% area median income. This is due to the equity ratio compared to the total cost of the project. Board members will also keep in mind that state legislation initially establishing the Go Housing MFHP to assist eligible low income defined as up to 80% and moderate income up to 95% of AMI housing. Similarly, enacting legislation for the Housing Montana Fund also allows for the development of low income and moderate income housing. Also, community contributions are also a little different this time with the competitive loans versus the 9% rounds. Typically, it is viewed favorably that a project is receiving support from one or more community contributions. However, board members and staff recognize that under this competitive loan program, the project may be early in its development stage, and a success multifamily loan may be the first fund source secured for the project's capital stack. Additionally, many Montana communities are seeking ways to increase the supply of affordable housing in their community and or preserve existing affordable housing. Smaller cities and towns with less capacity may have limited opportunities and resources to support a proposed project. Also, board staff reserves the right in consultation with the project applicant to move projects to a different program, then requested to best utilize the available funds. However, projects that did not apply to more restrictive GO housing from MFHP, formerly the Coal Trust, will not be asked to shift to that fund source given the first lien position and subject payment to property taxes required. Any questions on all of that?
Any questions from the board? Okay, think we're okay with that, Jason.
Okay, and any questions then before we call the first project?
Let me make a couple comments. First off, the board, you got my memo that we're going to go over the first 6 projects and we will make our choices on those 6 first. We will then proceed to tabulate. Once tabulated, make the motion for those, whatever they are, to proceed. That way, you can clear that out of your head, if you would, from a board standpoint, and then we'll move on to the next 15. The other thing that has struck me, and this is nothing that we're going to decide today, but to think about, we are now not in the LIHTC business where we're awarding tax credits. We are now in the risk-taking business. We are asking to be made, we're asking to loan $40 million or whatever that number is up there. We are in the risk business now. As such, we have a fiduciary responsibility. Based upon the way it's currently, it's not going to affect today whatsoever, but it's based upon what it's currently doing, structured, is that we're going to shift that fiduciary responsibility over to our staff. I think you need to think about whether you're comfortable doing that or not. I'm not saying they aren't capable. I'm just saying you're taking our fiduciary responsibility and shifting it to the staff. I don't know if you want to do that or not. It doesn't affect today. I can tell you, as an old-time lender, there is not near enough information for me ever to approve a loan here. And the staff recognizes that. I've spoken to Jason, he recognizes. But understand, we are now in the lending business. We're no longer in the tax awarding, credit award business where we have no risk. We have all the risk. Some of it's minor, some of it may not be. Please keep that in mind. So, with that in mind, those are the only comments I have. And Jason, I'm going to turn it over to you and let's get on with presentations.
Okay, Mr. Chair, so the first one up would be Granite Heights, located in Butte, and they have requested $1.1 million.
Can we have who's presenting Granite Heights, please?
This is Mike Spar in Missoula, and thank you for recognizing me. Jason, I'm unsure, the process here, in some of the communications, it says there wasn't a formal presentation and it would just be 5-minute period to answer questions. So if you can guide me, I can let everybody know about the project, and appreciate any guidance you can offer.
Correct, Mike. Yep, it's just a 5-minute informal presentation to talk about your project, whatever you wanted to say about it, and then there'll be questions.
Okay, perfect. Missoula native, my wife's family's from Butte, my family's from Anaconda. We've recognized that housing costs here in Missoula especially are astronomical. We built a multifamily housing project a couple of years ago here in Missoula. It's been successful, but the rents that we have to charge are in excess of $3,000 just to cover our loan service for that project. And several years ago, we bought this land in Butte with the intention of building multifamily housing. I'm currently in discussions with the planning department and recently applied with the zoning board for increase in density variance and adjustment of setbacks and parking. But this project is a 3-level, 8-unit apartment building in Uptown Butte. It is 2 2-bedroom units on main floor, 2 2-bedroom units on the second floor, and 4 1-bedroom units on the top floor. And we intend to match the look and feel of Uptown Butte with a brick facade and similar setback and wall adjacent of the adjacent properties in that area. Right now, Butte has a shortage, according to a 2025 study, Butte has a shortage of, I believe, 210 apartments, 210 available units for rent. That number is increasing, and Montana Tech actually has, I believe, a 40% increase in enrollment. And this property is situated right between Tech and the St. James Hospital. So we're targeting the missing middle, the people that aren't the low income Section 8, but aren't the higher income being able to afford the $250,000 and $300,000, $400,000 properties with mortgages. So it could be first year nursing staff or techs at the hospital. It could be faculty staff at the school or anybody in the surrounding area. So it'll be four two-bedroom units, four one-bedroom units. And according to the program, we're allocating 75%, so at least 6 of the 8 units in this program with guaranteed 30-year maximum rent and rates according to, I believe, Jason, it's the 95% AMI for the Butte Silver Bow County. And we are not asking for any property tax rebates or anything. We have already paid cash for the land. So this would just be funding the actual build cost, and we are contributing approximately $200,000 towards the project in land and soft costs. And as part of the program, I think I discussed with Jason and his team, upon closing after our construction loan, which would be by a conventional lender, we would also bring forth $20,000 in operating reserves to, I guess, address Chair Posey's concern on repayment ability. So anyway, that's the project, Uptown Butte, and providing desperately needed infill for housing in the area.
I was just going to say 1 minute left. There you go.
Thank you, Mike. I appreciate that.
Yeah, thank you.
Board questions for Mike regarding this project? Mike, my one question is, you're doing 8 units for 1.1 is your request, so that's 137.5 a unit. You put in a couple hundred, so that's another 40,000 a unit or whatever that number is. That's pretty inexpensive. How you getting that done compared to what we've been seeing? Let me put it that way.
No, great question. So our last project in Missoula, we came in just over $209 per square foot for 7,100 square foot under roof. Came in on budget and built out within 10 months. And this project is approximately 5,600 square feet under roof. And we're estimating, because it doesn't have the higher end finishes that we did in our previous project, about $190 per square foot build cost. And so just by pure square footage and build costs, because we haven't put it out for bid just yet, that's where the estimates come in. So I estimate worst case $1.3 million build cost, including our soft costs. And we're looking to, after the 90-day stability period that Jason mentioned, getting up to 95% LTV in this loan for 1.1.
Okay. All right. Thank you very much.
Mm-hmm.
Other board questions?
If I may, Chair Posey, Mr. Spark,
Absolutely.
could you just repeat your last point that you made in your presentation about the ability to repay the loan?
Oh, yes. Well, I mean, we will be renting the units out at the 95% HUD AMI, and estimated about $11,000 a month in rental income. And that particular area in Butte has over 95% occupancy. So there's no concern there. With the current traditional lender rates, we would operate the project at about break even. With this program, it would actually allow us to cash flow, which further reduces any risk of repayment. And then I believe Jason Hansen told me that part of the program is we have to put in at least 3 months of operating reserves of whatever the payment is. So the debt service, I think on 1.1 at 3.25 is around $4,800 a month. And we offered to fund $20,000 at closing in operating reserves as part of the program. So,
Thank you.
Other board questions?
And Jason, I don't know if that's a rolling, it just sits in there just in case as a just in case fund or how that works, but that's the discussion that we had.
Correct. Yep. Nope. It's in there for just in case.
Okay.
Any other board questions? Do we have any public questions or comments on this project?
Seeing none, Chair Posey.
Okay, that being the case, Mike, thank you very much. And Jason, is back to you in the next project.
All right, thank you, Mr. Chair. So next up is the Churchill Fourplex in Manhattan for 1 million, or roughly just over $1 million.
Hey there, this is Jeff Riggs. Am I allowed to screen share or no?
No, it's just a verbal one.
Okay, no problem. So again, my name's Jeff Riggs, and a little bit about me. I've been in real estate investing for about 25 years. Actually, my first project I did was I was in school at MSU and was played basketball, and I was on scholarship there. So I actually used my scholarship check and money to put a down payment on a house in Bozeman back in the late 90s when the housing was about 10% the cost it is now, and kind of just grew from there with rentals and projects in the area. We've done a lot of adaptive reuse projects, most recently in Uptown Butte. So shout out to Mike and his project. We love doing projects over there. And we've had a lot of experience in doing those types of projects. So that leads me to this current project, which just a week ago, there was an article in the newspaper about the Bozeman School District 7 asking for community help to finding housing for staff and teachers. And although our project is small with only the 4 units, it's 16 total bedrooms, which allows us to get people like the staff and teachers into housing families that are really struggling to find places to live in the Gallatin Valley. A lot of the building that's going on there right now are studio 1-bedroom, 2-bedroom units. And so we feel like this is just hitting the perfect market for this type of project. Our project goals, we're going to use 100% of those units. All 4 of them will be targeted at 85% AMI to serve families, those essential workforce families, larger groups in that context. We're going to be doing some work on the property. It was an old church, and so we're reusing that space and turning that into a fourplex. But it also kind of looks like a church from the outside. And so we're going to be redeveloping that a little bit from the outside, as well as adding in some more grass, landscaping, and things around it. So it doesn't look like a church parking lot. It looks more like home. And while we're doing that, we'll have less asphalt there, but we'll actually add 4 parking spots to what's there, which is, there's plenty of parking for the full area, but we'll be able to utilize that. There's 3 other houses on the property right now, which have been and currently are used in Section 8 housing and other low-income projects. And so we are, relying on our experience towards those projects and the low-income part of it as well. The community benefit is that we're repurposing this vacant building. And again, in our area, it's really, really tough to find housing and to get space available. So this is like a win-win. It's taking a vacant building that's not being used anymore. It's about 8,000 square feet, and putting it into housing, which is easily the most needed thing in our area. It's about 2 blocks away from Manhattan Christian School, and it's about 10 to 15 minutes away from the Belgrade schools and about 25 minutes away from the Bozeman schools. And so it gives a great opportunity to service those folks that the article last week was talking about. We're investing in our neighborhood, which is going to make the appearance look a lot better. It was kind of a rundown lot when we first bought it, and we're excited about kind of fixing that up and making it look nice. And like I mentioned, just having those family-sized housing is going to be really critical for this project. We've owned this lot since 2018. Its current CMA value is 1.45 million.
1 minute.
Our request is just over $1 million. And so the loan to value is at 71%. And the Montana Board of Housing would hold the first lien. That's the only note that would be on the project. And like I said, we're buy and hold investors. And so we want to do great projects because we're going to continue to own and operate them. And so we want to do it the right way. So why should you choose to fund our project? Well, we can get 4 families housed in under a year with an existing building, existing infrastructure. We have long-term ownership. We're experienced developers. We're going to do this project at 85% AMI. We're going to service large family housing, which is a huge demand in the valley. And we have significant owner equity, which makes this a low-risk loan. So we're ready to rock and roll and make this project happen. So thanks for your guys' time.
Thank you, Jeff. Do we have questions from the board? Jeff, I have one. Go ahead. Who has the question?
Like 2 of us. I guess I'll
Hey,
go
Ryan.
first.
No, go ahead.
Yeah, I just wanted to clarify that the 4 houses that are currently being rented on that property, they're not going anywhere as a result of this project, are they?
Correct. They're not going anywhere. They're still being rented. Like I said, a couple of them are Section 8 housing right now, and they've been there for years in that capacity and will continue to operate in that same capacity.
My question was along the same line, Jeff. At least when I'd read in your presentation, they were all in the same lot. Are we getting that all the security?
Correct. It's all one lot. They're not split up at all, and so it's kind of an all or nothing proposal from the collateral position, which again makes this pretty safe from that standpoint. It's got quite a bit of value based on those. And I should clarify, there's 3 houses on the property. 2 of them are single family houses. 1 of them is a duplex. But those are all on that same property that would be part of the collateral for this project.
And our collateral would be in a first lien position, correct?
First and only, yes.
Okay. That's what I thought. I just wanted to make sure. Thank you. Other board questions? Okay. Can we have any public comments or questions regarding Churchill 4, the Churchill fourplex?
Seeing none, Chair Posey.
Seeing none, Jeff, thank you very much.
Thank you. Sorry, Chair Posey, can I ask one more question?
Absolutely, Ryan.
Can you speak at all to the demand for this housing locally, like in Manhattan?
Yeah, I think so Churchill, if you kind of think of it as a triangle, it's south of Manhattan and it's west of Belgrade. So it's a very small community that doesn't have a ton of demand right there. All of our people that are in the houses that we have there currently are Bozeman, Big Sky, Belgrade residents, and they struggle to afford living in those communities. And so that's where our fit, we find like, we feel like this is a great opportunity, again, to utilize this vacant building, but to give it a place where we can be under the value, under that kind of that huge number that a lot of people have to do from an investment standpoint to be able to put 4 families into a space like that. But realistically, it's not going to be somebody who's working in Churchill. It's going to be people that are living in Churchill, working in the greater Gallatin Valley area.
Great, thank you.
Okay, any others? Okay, Jeff, thank you very much. We appreciate it.
Thank you.
Jason, back to you.
So the next up we have is Homes on the Range, located in Roundup, and they are requesting $2.1 million.
Good morning. Can everybody hear me?
We can hear you, Andy. Go ahead.
All right, perfect. All right, good morning, Chairman Posey and members of the board. My name is Andrew. I go by Andy, and I'm with Northwest Real Estate Capital Corp. And I appreciate the opportunity to present Homes on the Range today, a preservation project, as Jason said, in Roundup, Montana. Joining me today will be Mike Morgan, our favorite Southern friend, chairman of the Muscle County Housing Authority, and our local partner on this development. I will provide a brief overview of the project today, and Mike will share a few remarks at the conclusion of the presentation regarding the importance of this project to the local community. So Homes on the Range is a proposed 50-unit affordable senior housing community for those 62 and above that will replace the existing building, which currently serves some of the most vulnerable seniors in Muscle County. The driving force behind this project is the condition of the existing building. The property is experiencing documented foundation failure that has already caused flooding issues and rendered one unit uninhabitable. While engineers and consultants have evaluated the property, the reality is that no one knows and no one can say how much longer this building will last. What we do know is that the condition will not improve, and the risk to the long-term habitability of this property continues to increase. This creates a significant concern for those residents who call Homes on the Range home today. The market study identifies approximately 121 income qualified senior households in the primary market area. Yet Homes on the Range is the only affordable senior housing property in Roundup. The property remains fully occupied and maintains a waiting list, demonstrating that ongoing need for affordable housing in the community. If the existing building were to become uninhabitable before a replacement is constructed, there's essentially no comparable affordable housing options available in Roundup for these residents. Many of the seniors would be forced to leave the community where they have lived for years, separating them from their family and friends and the support services that are so critical for their well-being. This project is about preventing that outcome. GO funds are a critical component of the financing plan because they help bridge the gap necessary to replace this aging and failing asset while preserving long-term affordability. The new development will include 20 units restricted at 30% area median income and 30 units restricted at 50% of AMI, ensuring that this property remains affordable for seniors who need it most. The project will provide supportive services. There'll be an on-site service coordinator and partnerships with Area 2 Agency on Aging. Ultimately, this is a preservation project as much as a development project. It ensures that vulnerable seniors are not displaced and that Roundup retains critical affordable housing resources for decades to come. Thank you for your time. And at this time, I would like to turn the time over to Mike, who's the chairman, like I said, of the Muscle County Housing Authority, and he'll give us a few thoughts and share the importance of this project to the local community. Mike, take it away.
We're waiting for Mike Morgan?
We are, yes.
Must be taking a nap.
I
Well,
don't see a Mike Morgan on here.
I think he was. I forwarded him the link to the meeting, so I think he's under Andrew Connell. So there's Andrew Connell, me, and then there's another one. So I'm not sure if he's having trouble. Maybe he's on mute.
well, this is Mike Goff. I'm a Muscle County Commissioner, and I'm certainly very familiar with this project we've been working on for
Can you
2
hear me
years.
now?
Yes. There you go.
Here
Mike.
he is.
Oh,
Here he is.
I am so sorry. I'm so sorry. I'm Mike Morgan. Yes, I was just while you guys were taking a break a while ago, I was and I'm at Homes on the Range right now with this meeting. And I was in a room that one of our residents passed away a couple of weeks ago, and actually there's some water damage in one of the corners there. So that remains to be seen where we can rent that one. But I'll tell you, Homes and Range, they were built in 1977. It's only a 3-story building we have in Muscle County and Roundup, and it's
1 minute.
it's been a great asset to our community. There's 49 units occupied. One is unrentable. Most of the people that I've talked to here at Homes on the Range have nowhere to go if something happened and they were displaced. But so this is a very, very vital, important project for our community because we have very little rental apartments around or rental houses, and so all the people there are just great people. It's a great environment, and we really, really do appreciate coming before you this morning, and we just thank you for your time very much.
Thank you, Andrew. Thank you. Do we have board questions? This was one of the projects that we advanced forward at our last meeting in the 9% round. So I think most of you are familiar with the project, may have got most of your questions answered at that point in time. Are there any other questions, though, that the board may have at this time?
I have one. I appreciate that there's a number of funding sources here. Do you know where we would stand in terms of our lien priority?
Yeah, so you'd be in the number 1 position. You're the only hard debt we would have on the property.
And Andrew, this is Jeanette. Jeanette, what is your projection of length of time to rebuild, to get a new building? What time?
Yeah, we're anticipating a 12-month construction period.
Okay. And you think that's gonna outlast? I hear we just had a unit where someone passed away and there's water damage. How much more of those, just kind of curious, how much more of those things do you think might happen in the next year?
That's a great question.
Yeah,
There was some work done on one corner of that building to try to alleviate some of this damage because we want that building to stay functionally strong
Sure.
the remainder of the time these residents are there, and it was to slope the water damage off. So
yeah.
hopefully that corrected that on 8/18, but we just don't know for sure yet on that.
And that's, sorry, Mike, to cut you off. And that, I mean, that's the question, Jeanette. It's, how much longer is this building going to last? Nobody knows.
Yeah. And I do hear that, but I was curious. Your 12 months is probably reasonable. Just not going to be done in a month.
No.
Yeah. All right. Just make sure. Yeah, that's all. Thanks.
Thanks, Jeanette.
Other board questions?
Chair Posey, I have a
Yes,
question.
Rachel.
Will any of these seniors that are currently inhabiting these rental properties, will they be displaced, or how is the work plan for getting this redone?
Yeah, that's a great question, Rachel. And the great thing about this project is we actually don't have to displace them. So once the new building is built, then those residents in the current building, Homes on the Range, will just transfer to the new building. So there will be no displacement with this property, or with this development, I should say.
Thank you.
Other board questions? Hearing none, do we have any public comments or questions?
Well, like I said, this is Mike Goffney. I didn't been very familiar with this. That building has been sinking ever since it was built. They pump jacked the foundation 5 times that I know of, but they can't seem to stop it from moving, and it's causing a lot of damage in that building, and it's not safe at all, really. So, but it's 1 point lower than being condemned. So we don't want to condemn because we have nowhere to put them people until we have a new facility. So.
Okay, thank you.
I'm Robert Pankratz. I'd just like to echo that, you talked about timeline. It's sort of an urgent project for the community to get this new facility built as soon as possible so that people won't have to be displaced if the other building continues to deteriorate.
Very good. Thank you. Other public comment?
Seeing none, Chair Posey.
Thank you very much. That being the case, Jason, back to you, and let's move on to the next project. Thank you, gentlemen.
Thank you for your time.
And just to clear up one quick thing, these first 6 projects, they all have to be first lien positions. Otherwise, they wouldn't qualify.
Okay, thank you for that clarification.
Yeah, so with that, the next one is the Weir Building in Roundup, and they are requesting just over $4.3 million.
Hi, everyone. My name is Virginia Duke, and I will be representing the developer on this project. And I'm going to talk to you about the Weir Building. So the Weir Building is going to be a 2-story mixed-use building on Main Street in Roundup, Montana. It was built in 1914 and spent most of its life as a furniture store on Main Street. The project will become 16 apartments between 1 and 3 bedrooms. All of them will be between 79 and 82% AMI, and serving the missing middle is a core part of our mission. It will also have 5 commercial spaces. 3 tenants have already signed LOIs for those commercial spaces, including a restaurant brewery as an anchor tenant, an old-fashioned ice cream parlor, and a well-established community in the community pet groomer. The project will be a historic rehabilitation and adaptive reuse. The first floor along the front will be commercial, along the back will be residential, and all of the second floor will be residential. And the capital stack benefits from historic tax credits. We have extensive experience working with historic buildings, and our architect on record, High Plains Architects, has a lot of experience with historic rehabilitation and the process for applying for historic tax credits in order to make sure that we secure that for the capital stack. It will also be a LEED Platinum building. We also have experience creating sustainable high performance buildings. And so that both results in a higher quality building, meaning lower long-term maintenance costs. And also our tenants will pay no utilities. So it'll be a net zero building in terms of electricity with a solar array on the roof. And the project does benefit from some energy tax credits of about $56,000. This project has extensive community support. We are purchasing the building from Muscle Shell County. Commissioner Pankratz and Goffney have already made comment and are here. But the commissioners saved the building and have already fully abated the building. It has been structurally reinforced and it has a new roof. And so as historic buildings go, we're purchasing something with little to no surprises, which makes a huge difference when you are predicting your construction costs and what the building, how long it will take to rehabilitate. There's also strong community support for the project. As part of our application, we submitted letters of support from the Muscle Shell County Commissioners, from the City of Roundup, the Mayor's Office, and from Roundup community partners. And they all speak to the need both for housing in Roundup, in that missing middle, which is reinforced by a recent housing needs assessment completed for the city that shows sustained small growth over time that will need to house those new residents of Roundup. And it also speaks to the support and desire to revitalize downtown, the Main Street of Roundup. The Weir Building is the largest contiguous stretch of undeveloped real estate on Main Street and will be a real catalyst for community development and revitalization on that street. And then finally, we have the experience to get this done. We have been developing historic buildings for over 20 years, and we will also be working with a property management company, formerly Tamarack, new Northwest Real Estate Capital Corp, to be our property management company for the project.
1 minute.
And with that, I yield to questions.
Thank you very much, Virginia. Do we have any board questions regarding this project? Any board questions?
I have
Yeah,
one.
Mr. Chair.
Is
Go ahead, Ryan.
the residential units in the building right now, are they low income units?
The building is abandoned. Well, it is
I
empty.
see.
It was just a furniture store, and I believe they warehouse the furniture upstairs. So yeah, right now it will be converted into residential units.
And my question had to do with you talked about some structural reinforcements, the roof. What about HVAC in a building like this? I'm just imagining a boiler downstairs. I mean, is that? I'm sure you've given that thought, but any surprises expected there?
No surprises expected there. There is nothing there at the moment in terms of HVAC systems. And so as part of the construction process, we're about to embark on our architectural drawings now. So at the very beginning of the process. And through that, we will map out the location of HVAC and venting and plumbing and all that. But right now we're essentially beginning with an empty shell that has been cleaned. Beautiful in there. You should have seen the before pictures. But we're starting with basically a clean, abated, structurally sound, empty shell.
Thank you, Virginia.
So Virginia, I'm going to ask you this question. So I love historic preservation. I'm actually big time into that. But let me say that I heard you say that not only are we talking about the units, but we're talking about storefronts. We're talking about commercial interests. How do you put the two together with that dollar figure that for Board of Housing to be involved in both? See if I'm saying that right. Go ahead.
We talked about this with Jason and Bruce as part of evaluating if we'd be eligible for this program. And we have essentially calculated that less than 40% of our square footage of the project is commercial, and less than 30% or so of the uses would go toward the costs. Essentially, would go toward commercial. So the sort of takeaway that we got in working with Jason and Bruce is that this would qualify for a Montana Board of Housing project, because what we're asking for in terms of the capital stack also is proportionate. So the loan to cost ratio that we're asking for is 64.5%. So effectively, the funding that would come from the Montana Board of Housing covers effectively the cost of residential space in the building.
So you're saying there's another funding source then for the commercial. That's what you're saying?
That is correct. So the other parts of the capital stack include, we have private equity, we have historic tax credits. Historic tax credits are an essential part of the component of the project and will net approximately 20% of the capital stack comes from historic tax credits. And then we're also either, again, we're at the beginning of this project, but we have already secured the equity, and we may either raise additional equity or we may cover the remainder of the gap with a second position loan, permanent loan for the duration of the project. And so and then there's the small energy tax credits. So those sources combined will essentially cover the commercial space cost.
Okay, all right. Thank you. Appreciate your response.
Other board questions? Okay. Public comments or questions regarding the Weir building?
Good morning, Chair, members of the board and staff. My name is Teresa Dumit. I'm the project manager for the Weir Building project for Muscle County. I've worked professionally for our local hospital and for our county for the last 12 years. I've done development work for 20 years. And personally, I've volunteered with the community in the Montana Main Street program for the intentional development of our Main Street. This project meets is mentioned and aligns with our city and county growth plans, our Roundup Main Street plan. It encompasses everything our community needs for intentional economic development. In 2024, we did have some structural issues that our community leaders came together and said, we've got to address what's going on in this building. Luckily, our county commissioners took point on that project, and we did about 8 months of due diligence to ensure the feasibility of the project. And we've worked for the last, since then, to do our scope of work, which, as Virginia said, was the roof replacement to address the structural issues and to clean up the hazardous material. And that made it, our intention for the community was to make this property affordable for a developer. And we're grateful that Longview stepped forward as a partner in this project. We have invested about $2 million in this building. 900,000 have been grants, and the Department of Commerce has been a huge partner. One with the adaptive reuse grant with over $550,000 in grants invested just from the Department of Commerce. So this application represents really the last hurdle that we have to get over for this project to be successful. And in serving the local hospital and in working in this community for 12 years, housing is an incredible need. It limits our sheriff's department, our healthcare, our school board, our school to hiring staff because they do not have a place to live. So we end up using interim staff or have a shortage of staff. So this project is really critical to address that workforce housing component and to stimulate intentional economic development. So we really appreciate your consideration with the hopes that you'll be our best and final partner in this project. Thank you.
Thank you. Other public comment, please.
This is Bob Pankratz. I'm County Commissioner. I could echo everything Teresa's said. There's been a lot of work. There's been a lot of public input. There's been a lot of excitement about this, but essentially we've saved a building that, and we've made it affordable to a developer. And hopefully we'll get some workforce housing and some commercial space as opposed to having to demolish it and lose all that opportunity. And this, as Teresa said, this loan application is a critical component. We've been meeting weekly with the developer and identifying, path forwards, actions. And it's been a really positive, productive move. And we want this to move along briskly so that as soon as possible, that building could be occupied and being used by the community. Thank you.
Thank you. Other public comment.
Well, I just want to reiterate everything that Bob said and Teresa said. I mean, this project has been something we've worked for 2 years now, and I think it's going to be a great thing for Roundup and Muscle County. So, thank you.
Other public comment.
Seeing
Just
none,
a
Chair
question
Posey.
to somebody, Joe, I'm sorry. Who is the developer? Who is the developer?
So the developer is Longview Development Services. We're a new name, but we've been working for a long time out of the Billings area, and have developed a number of historic buildings along Montana Avenue in Billings.
Oh, thank you.
Any other comments?
Seeing none, Chair Posey.
Thank you very much, Joe. That being the case, we thank everyone for their comments and the presentation. And Jason, let's move on to the next project.
All right, next project is Broadway Apartments in Lewistown, and they are requesting a little over $4.2 million.
Hi, this is Randy Hafer, and I first want to make sure you guys can see me.
Yes.
Yep.
We can.
Okay. So I'm representing the owner, Broadway Apartments Development Venture LP, as a general partner of that partnership. This project is located in Lewistown, Montana. It's an existing 3-story apartment building that has been vacant and completely uninhabitable for at least 40 years. We have been working closely with Snowy Mountain Development Corp. And others in the community, and have just within the last year finally been able to get some funding together through brownfields in order to have the building cleaned up and abated, and also a new roof put on so it doesn't leak anymore for the first time also in 40 years. But what we're planning to do is to restore this building. It's a historic restoration. It's not really an adaptive reuse because it was apartments. It's going to be apartments again. It will be 18 instead of the original 24. There will be 2 studios, 2 3-bedrooms, and then the balance of the units are 2 and 3 bedroom. I'm sorry, 1 and 2 bedroom units. We're targeting 77 to 83% AMI. So again, we're looking at providing housing for the missing middle in Lewistown. And we have extensive experience with historic buildings. We already have our Part 2 historic tax credit application approved by the National Park Service. So we will qualify for the credits when we finish the project. And those credits will provide about $1.3 million in equity to the project. We do have also, this will be a high performance building. It's also looking to be a LEED Platinum building. We've been doing high performance buildings on our projects for a long time now, and we have learned that doing a project with really high quality and highly efficient systems and materials leads to significantly lower operating costs over the long term. This building will have a solar array also on the roof that will allow the tenants, the building's all electric, the tenants will have no utilities to pay because it's all provided on the roof. So we're also going to be able to qualify for some energy tax credits. And then we also have some private capital as part of our mix here as well. In this particular case, this project is actually ready to go. We have drawings are complete. We have a contractor under contract. We have received a permit from the state, or from the city of Lewistown, sorry. We are still with the general contractor working to finalize the construction numbers, but we're getting very close to that. This step here is critical really to the success of this project. It has unfortunately extended for a very long time, started before COVID, and then the world changed. So we've had to do a lot of things over. But we do have a lot of experience with this kind of building. It's really needed in Lewistown. There's a critical shortage of workforce housing in particular, as there is in almost everywhere other town in Montana. And we're looking forward to getting this on the market and in use again for the first time in decades. And the community is very excited about that. So I'd be happy to answer any questions.
Thank you, Randy. Any questions from the board? Randy?
So Randy, this is Jeanette. So you said your construction costs are not yet complete. But we have a number from you as $4,216,000. Explain when you say your construction costs aren't complete.
That will be the number.
That will be the number.
It will be the number. We will get it there. We will get it there.
I'm just curious how you verify that.
Pardon? I'm sorry.
I'm curious how you would verify that when you just said what you said. Construction costs not complete.
We've been working on it for a long time. We know what the number has to be. We've worked with this contractor a lot, and we will get it to where it needs to be.
Okay.
As we've been able to do really every other time. It's a very difficult market, but we have been successful with this contractor, and there's a lot of give and take, but we maintain the two critical things that we have, three really: the historic aspect, because the tax credits are essential; the high performance aspects, because that means that we have lower operating costs over the long term, and then we have a budget to make this all work. And he knows what that number is. We're not very far apart at this point anyway. We'll be actually meeting tomorrow to try to finalize all of that. So we're not concerned about being able to meet the number that we've presented to you.
Okay, thanks.
Randy, who currently owns this building? Maybe it was in the write-up and I just missed it.
Broadway Apartments Development Venture LP owns the building.
And they're going to be a partner with you in this. Is that correct?
Well, I'm the general partner of that partnership. We obviously have other partners that we work with, the High Plains Architects. We will also be working with Longview Development. I'm sorry, not Longview. It's Urban Frontier Development Services for development, and we'll be working with Northwest Real Estate Capital Corp for project management. Property management, I should say, property management after the project's completed.
Thank you. Other board questions? Okay, public comments and or questions regarding the Broadway Apartments in Lewistown.
Seeing none, Chair Posey.
Seeing none, Randy, thank you very much for your presentation. And Jason, let's move on to the final project.
All right, final project is the Hogan, located in Missoula, and they are requesting a loan of $5 million.
Hello, you can hear me?
Yes, we can hear you, Mike.
Yes. Hi, my name is Mike Robinson. I represent the Hogan in Missoula. Start off about 15 years ago, I was a full-time farrier, a horseshoer. At that time, I moved my mom to Missoula, and about a year later, my dad to Missoula, and then after that, my aunt to Missoula. And in the process, I learned just how limited the options were for senior housing in Missoula, I guess across the state. I had an early partner who was a doctor, Chris Caldwell. He and we got talking, and we thought about there's something we could do to design senior housing in a way to fill a gap that just wasn't there. So we came up with three principles. We wanted first and foremost, quality housing with a social environment, common spaces to be able to create a community. Typical apartment buildings are just very isolating, especially for seniors. Second principle, we wanted people to be able to age in place. A lot of housing, as people grow older, become mobility impaired, you have to make modifications to the place. We wanted to build that all in ahead of time. And thirdly, we wanted something affordable. We wanted something that someone could afford to rent, even if their primary income source was just Social Security. So we designed a building, had an architect to help us. We were looking for a piece of land. The architect called us and found a great piece of land being sold by the First Presbyterian Church, which was right behind the senior center, just 2 blocks away from a grocery store. We thought it would be ideal. I called the city planner to ask about zoning, and it was residential zone. So our idea to build an apartment building would not work there. We talked for a while. I gave up on it, on that piece of land. And about 2 days later, the city planner he tracked me down, called me back, and he said, you know what you're really talking about is something like a fraternity house or sorority house. I said, well, kind of. And he said, we could zone that. We could put that there if that's what we're talking about. And so we had to make some modifications to the kitchens inside the units to do that. But we got it approved to be zoned in this area. We financed it privately. We came up with it was an $8.5 million project. We needed $3.5 million in equity, higher equity than if it were a traditional apartment. The banks we talked to, just because it was something different, unique, they wanted to see higher equity in. We raised that equity from 20 investors, several of which were from the church that sold us the land. They liked our project. They wanted to support us. But then just around the community, we found people who wanted to support senior housing in Missoula. Our smallest investor was $50,000, and our largest was just over $300,000. We built it private money. We were not subsidized, other than to say the church put out an RFP for projects to develop the land, and we were not the high bidder on the land. But the church liked our project. And so in that sense, we did receive a subsidy from the church. They wanted to put our project there and chose us, even though we were not the high bidder. The project was built just this last weekend. We celebrated our third annual birthday. So we've been up and running for 3 years. We were completed construction on budget. We had to build during COVID, which was a challenge. We did run a little bit late with the construction schedule, but we were completed on budget. So if you look at our building today, it's 36 units. There's quite a bit of common space in the buildings. Common spaces include like a large craft room where residents get down together and they'll have teach each other how to paint or weave, that kind of thing. Common spaces include community gardens, community kitchen. About 60% of our building, our occupants still work. They're still employed. They might be retired from their primary job, but they'll pick up a few shifts at the grocery store, teacher's aides, that kind of thing. It's just created a very strong social group. So we want to use this money. We have a loan from Stockton Bank for $5 million, and we want to buy that out. When we got our loan, we were at 4%. And that's what our rents are based on. If we're going to have to refinance next year, our term will be up. If we have to go up to market rates, that means our rents down to the units will have to go up to $300 about. So we're trying to keep our rents down for our existing tenants. I think I'm out of time. I could talk a little bit more.
Yep, time.
Okay.
Okay, thank you, Mike. We appreciate that. Board questions.
Meg, I'm just curious. I know Missoula. What did you buy? Fraternity, sorority, and which one?
No, we built it. We built it from the ground up.
Okay.
In terms of the planning, we could not build a typical apartment building at this place. But if you make some alterations to what a typical apartment would have in the kitchen, it's essentially classified as a fraternity house, a sorority house, but it's for seniors.
So what's the address? We're
on 6th Street between Higgins and Orange. So if you're familiar with Missoula, there's the senior center, and we're just right behind the senior center.
Oh yeah, I know where you are. Okay, that's what I was looking for. Thanks.
Sure.
Other board questions? Mike, I understand in the presentation I read that should we approve this, you will then rent restrict this building in perpetuity. Is that correct?
That's correct.
Okay. And what will those rent restrictions be at 85%, 95%? What is the number you're shooting for there?
We're shooting for 80% AMI.
Okay.
And we've been able to achieve that so far, but we're privately funded. We don't have to. And if we have to refinance our loan at current rates, we're going to have to push well past that. It'll probably be a 20% height rent increase for most of our tenants.
So I just want to make sure I'm correct, and I believe I am. You wish to create permanent affordable housing rather than market rate housing at this point. Is that correct?
That is correct.
The other thing I noticed is that your units are like 450 square feet. If I looked at that properly, that seems quite small. I mean, I had a small cottage and it was 600 feet and it didn't have a bathroom in it. It was up the hill outdoors. So 450 seems quite small. Tell me about that.
They are quite small. There's we have 23 studios and 13 one bedrooms. The studios have a bathroom and a kitchen. Well, they all have all the units have bathrooms and kitchens. You can kind of see if you walk around, you see an apartment building our size. You'll see from the outside, it's apparent. You'll see most of them will have private decks attached to each apartment building. What we've done from the outside, if you look at our building, we don't have the private decks. We have these very large decks that you can see from the outside, and that's just that same kind of principle happens on the inside. We take all these what were private spaces, and instead of building little individual decks that hardly get used, we built these large decks that could accommodate lots of people in the building. So we built basically what I'm trying to say is that in order to keep the project affordable and on budget, we wanted to create these private spaces. And so we took some space from the apartments, and that's how we had to shrink the apartments down. But we created these larger spaces in the buildings. In addition to people's private apartments, we have common laundry rooms. Instead of in apartment laundry, the laundry room is common to each floor. Each apartment does get a storage space in the basement. And we find that residents they spend a lot of time out in the common spaces, so it's you're not just stuck in your apartment. You have the whole all the common spaces of the building to access and use.
Okay, thank you. That answers my question. I appreciate it.
Sure.
Other board questions for Mike? Do we have any public comments or questions regarding the Hogan in Missoula?
Seeing none, Chair Posey.
Thank you very much. Mike, thank you for your presentation.
All right, thank you.
Okay. Jason, go over what we're to do on these first 6 projects, please.
Correct. Yep, we'll have Bruce Brensdale share his spreadsheet. It'll make it easier to follow. So on this round, we're going to do each board member will list their top 3 projects that will get 2 points, and then the next 2 projects will get 1 point. And as same as voting on the tax credits back in May, just please, reiterate why you're voting for each project.
So my question to the board, do you need a couple minutes to do this? Are you ready to do it now? How would you all like to proceed?
I'd like a few minutes, Mr. Chairman.
Yeah,
Okay.
me too. Yep.
5 minutes to do the trick, or do you need 10?
5 will be fine.
Richard?
Yes, 5 is fine.
Okay. Okay, board, take 5 minutes and we'll come back. That would put us, 5 minutes from now. And I'll go ahead and start off when we come back. So I can kind of show what at least I think we ought to be doing. Not relative to order, but relative to the presentation the board should do. So see you in 5 minutes. Thank you very much.
Okay.
They go across. Thank you for starting the recording, Joe. So we're back. We're being recorded. I'll take the names as they are across the top of the page. My name's first, so I'll go ahead and start. These are in no particular order. My first, one of my first top 3 will be Home on the Range and Roundup. I like the rural location. It's senior. It's going to involve creating a structure and for 50 people. I said a lot about the project the first time around, and in the 9%. So I still believe in the project. Another one is Granite Heights in Butte. I like the fact of the cost in that unit, the amount of equity and the commitment on the part of the developer to provide additional funds as reserves. My final one in the top three is the Churchill fourplex. It's a small project in an area where they certainly need housing, as they do everywhere. But it's, again, we're going to be in an excellent equity position on this particular unit, particular project, particularly with the other rental units there. My next two are the Hogan in Missoula. I like the fact that we're going to create permanent affordable housing. that is what is being done with the project that's already completed. It's a little different to be taking out a lender, but we know this would, in fact, if it went to market rates, undoubtedly have to go to market. If it went to market rate, interest would have to go to market rate rents. And this way we can create permanent affordable housing in Missoula. And my final one, which was a more difficult between the two, but I have picked the Weir building in Roundup. I think there's a lot to be said what Muscle County has done and is adding to this and provided for this particular project. So those are my 5 projects. Jeanette, you're next.
Okay. Mine are in order, I think I would say. The first since we give points. Number 1, I picked Granite Heights Butte. Obviously, $190 per square foot, as you said, is a major positive on that one. As we talk about location across the state, every single one is needy, as we know. Every area needs it, so you always look at location. But I just really cared for that one. Number 2 is Home on the Range, which is Roundup. And again, my mindset, I'm going through my notes here. The historic rehab, I love that kind of thing. I heard about the different funding sources. I think that those were critical to me. The number 3 on my list is Broadway Apartments in Lewistown. Again, we have some historic stuff going on there. The building has been cleaned up and abated. I just felt that Lewistown has not had a project for a while. That would be number 3. Number 4 is Churchill fourplex in Manhattan. I'm going back to my notes here. I'll tell you what, Jeff Riggs, who made the comments for this, you know what I really liked about you, Jeff, and thank you for saying that. You talked to me about a really responsible builder who, when you got a scholarship from MSU, you transferred that into buying a house. I think you have the right mindset for what you're going to be doing, and it's 85% AMI as well. And my last one is the Hogan Missoula secure housing. I appreciated the fact of struggling to get a location that really works. I do know where that is in Missoula. It's right behind the senior citizen. I think it's one that we should help. That's it.
Thank you, Jeanette. Rachel, you don't have to back cleanup today.
All right. So my top is Granite Heights. Granite Heights provides the largest immediate impact on attainable housing. The project also demonstrates strong readiness and long-term sustainability. My second is Churchill. Churchill leverage existing infrastructure while preserving community assets. The project also supports neighborhood revitalization and long-term occupancy stability. And my third one is Homes on the Range. Homes on the Range is addressing a critical need for that underserved population. This project also fills gaps. And then it's also a rural project. And then board chair, are we just doing 4 or 5?
5.
Okay, perfect. Number 4 is the Weir building. I also love historical renovations to buildings. The project also improves utilization of the existing infrastructure, and then it's also a redevelopment for the community. And then number 5 is the Broadway apartments, and the Broadway apartments for me is a dependable project. It also meets the needs of long-term housing stability and economic participation in the community, and then it's a lower risk investment opportunity. So that's what I have.
Thank you very much. Richard.
Thank you, Mr. Chairman. Wow, what a terrific series of presentations. Very impressive. I mean, I just wish we didn't have to choose, because a lot of thoughtfulness from everybody that's presented, and some really cool stuff going on here. I did put mine in order, and my first was Homes on the Range in Roundup. I find it very compelling that what they're attempting to do there to keep those people housed, and the community need, the location in Roundup, the leverage to the financing, the efficiency. I just thought it was a tremendous project that the community has undertaken. So that was number 1. Number 2, the Churchill complex, fourplex in Manhattan. I happen to be very familiar with that area, and what was said about people driving in to work where they have to work, and then having a place to live not too far from home. There are folks that are commuting way further than that from Big Sky and from Bozeman, and very efficient use of resources. And I thought, taking a community oriented project like that, where you have an old building that had a community purpose, and repurposing it, I thought that was compelling. Number 3, Granite Heights in Butte, very thoughtful development, leveraging the financing, and getting some housing in an area where it's increasing need. And I love the fact the location there between the major facilities. I think people will be able to walk potentially to where they're spending their days. So Granite Heights. Number 4, Broadway Apartments in Lewistown. I very familiar with Lewistown, and I think I know this building. I used to spend a lot of time in business in Lewistown, and just great to see, instead of just building something on the outskirts of town that's new, taking the community, coming together, and repurposing an older building is way cool. And I think the leveraging there, again, from a financial perspective, as well as the community need, is very thoughtful. And then very hard decision on number 5, but chose the Weir building in Roundup, another Roundup project. And again, some of the same reasons for the Lewistown development. Just, you've got people that are coming together as a community and trying to maintain a resource. There's a lot of synergy that can come from maintaining a viable downtown, keeping people. I think you can build infill from there, because instead of having a kind of a public nuisance of a vacant building, you're building that into something that can be there for the community, with the businesses as well as so you have the mixed use, the community need, the percentage of units. It all comes together. So I've got to tip my hat, though, because I feel bad. The Missoula project, the Hogan, it didn't land where I would have loved to. I just think the creativity there, and the fact that you've got the church that's been there for 150 years saying, "Hey, we want to make this work." I hope that project works even if it doesn't get the funding here. I think it's I know you've got the 4 million from Stockman, but there may be hopefully some other remedy here for you. But that's it, Mr. Chairman.
Thank you. And Ryan.
All right, so I had Homes on the Range as my top choice. Really thought that it checks all the boxes in terms of location and the low income targets, the AMI targets, size of the project. Really just all around, it seems like a great project. Number two, I had the Hogan. Again, here I prioritized units, probably is what pushed this up into the top tier, was just so many people potentially affected by keeping this housing rent controlled, and especially the fact that the goal is to have it permanently rent controlled. I think that's great. Third, I had Granite Heights. Seems like an excellent return on our investment. And it fills a nice niche there in Butte. And then 4, I had Broadway, and 5, I had Weir. And both of those, I really appreciated the sort of the rehabilitation of existing buildings and revitalization of the community.
There are the results. The top 3 are pretty clear. We have a 4th one, and then we have 2 that are tied.
So we'd want to.
And we can only advance 5, or we've been asked to advance 5.
Mr. Chair?
Yes, go ahead.
So we want a slate anyway for the next one up if one doesn't make it through. So we would want to do a tiebreaker for those last 2.
You want to do a tiebreaker for the last 2?
Yeah. Because one would, yeah.
So when you do the tiebreaker, you just want us to vote on one?
Correct.
Yeah, Jason, I think we need at this point, because this is a rank ordered slate that will be submitted, given the board's direction, and given especially where the cutoff line is likely to be, I do think we just need to do a tiebreaker between the 2 projects that have 4 points presently, the Weir Building and the Hogan.
Okay.
So Nathan, would you want just to vote on one project then as you go through, or is there a better way to do that?
Yeah, no, I think what we need to do is a second round of voting. Just each of the board members voting for one of those 2 projects. We tally that up, and then we identify the final ranking, the ranking of what would be ranked project 5 on the slate and what would be ranked project 6 on the slate.
So just one point for the one that they want.
Correct.
Okay. Board all understand that? Okay, very good. We'll go in the same order. I guess, Ryan, you get to be the deciding vote. Lucky you. I will choose the Hogan and Missoula. I still like the concept of creating units on a permanent basis, affordability. They're not there at this time. Jeanette?
I too am going to stay with the Hogan and Missoula. I think it's harder when we come to this kind of decision to give 2 to the same community. Not that they're not worthy, but that's a big part of my reason.
Rachel?
Okay, so the Hogan, with everyone's thoughts of that permanent affordability, and then also back to Jeanette's comment of we are funding a project in Roundup already, and so giving Missoula that permanent affordability.
Thank you. Richard?
Well, I'm going to flip over also and vote for the Hogan. I I think when it comes time that I want to move into a place, the idea of a fraternity house sounds pretty compelling. I had to throw that in there, but kind of in light of that, there was something that the folks mentioned with the Hogan, and that is that community space and not the isolation of apartments, and the fact they've gone out of their way with the common decks and the common areas. I think it was not the current Surgeon General, but a Surgeon General or two ago described loneliness as a chronic and major health condition in our country, and it's particularly affecting the elderly. So I do have some affection for that, and I've had some family members who have gotten in that spot before. So I would flip over and choose the Hogan.
And Ryan.
I guess I'm not the tiebreaker after all, but I'll cast my vote for the Hogan as well. And it's like everybody said, these are really tough choices. I'd say probably geographic diversity and size of the project between the Hogan and the Weir building were what did it for me. Particularly the fact, as Richard mentioned, or Jeanette mentioned, that we're planning to fund another project in Roundup. So that's my.
Okay, so the Hogan proceeds into the top 5. And now it is my understanding, and Nathan, I'm coming back to you now. It'd be my understanding we would make a motion at this point in time to move these 5 projects on to our staff for underwriting and funding, or I'm sure you're a better wordsmith than I.
Yeah.
You can come up with a proper motion there.
Yeah, and we have kind of wordsmiths some language. It's just a little bit of a tweak on that. What we're going to do is approve the rank ordering of the project applications, because again, technically, like, it's not so much as moving 5 forward and keeping 1 back. We're rank ordering them because if any one of the top 5 fall out for any reason, right, then the next project, the 6th one, would be considered. So what we would do, and Jason has this language here, is approve the rank ordering of the projects, and then the staff would move forward as per the language on the screen here, pursuant to that rank ordering list.
With this motion on the screen, do we have the ability to fill the names into this rank ordering on this screen?
I think that would be helpful. I don't know if Jason has the quick latitude, or whoever's running that, to copy
Bruce
and paste.
is actually doing it. So yeah, he was practicing it earlier. It's kind of messed up, but we'll get it in there.
Okay, that'd be great.
Yeah.
Bruce, for a kid off the farm, you do okay with the computer.
Is that what you're looking for, Chairman, Mr. Chairman?
We want the numbers in front of it, Bruce.
I can do that. You might want to give me 2 seconds to do that. What the heck right here?
Yeah, just get rid of the 1 and it should default it if you got.
There we go.
There we go.
Ah.
And Nathan, do we need the dollar amount on the Weir building in there?
Well, it's not approved for a dollar amount, basically.
Nathan, you're on, and Nathan's on mute too. It's okay.
Oh,
sorry.
Okay.
Yeah, I mean, I think if we just, again, for consistency's sake, because we're just rank ordering them, if we put in the amount of the application for the Weir building, that would be good, because again, we're just rank ordering the projects. And then because we're rank ordering them, and again, this isn't as relevant at the top, but I believe it was a tie for the first 2 projects. So just so it would be accurate, we could number them 1, 1, and then 3 at Churchill.
Okay.
Oh, gotcha.
If I believe so, we don't have that tally up, but I believe it was tied at the first two.
Yes, that is correct, Nathan, and I'll try to figure out how to. I'll change that.
Sorry to mess up your numbering there, Bruce, but
You're asking for miracles now.
There's no pressure, Bruce.
Yeah, I'm glad we got
That'll
the right
work.
for the job.
Just got a huge crowd here to impress.
Bruce, I think that'll do it. I don't mean to put you through a bunch. Does that work for you, Jason, the way it looks?
No, that looks fine. We'll get it cleaned up though.
Okay. Okay. So I need to have a motion, as has been laid out here, for the rank ordering and advance it on to the staff. I have someone make the motion to approve the following rank ordering of projects for the Go Housing MFHP loan program: Granite Heights, Home on the Range, 1 and 1, Churchill 4, 3 Broadway Apartments 4, the Hogan 5, we're building 6. By this motion, the board directs the staff to move forward to underwriting and approval. Staff is authorized to finalize underwriting, complete staff approvals, and make all loan commitments pursuant to the above rank ordering of projects. Is everyone okay with the motion? Okay. May I have someone make that motion, please?
So moved, Jeanette.
Thank you, Jeanette. May I have a second for that motion, please?
I will second. This is Rachel.
Thank you, Rachel. All in favor of the motion, please say aye.
Aye.
Aye. Opposed, same sign. Motion carries. Thank you very much. That's our first round. Cheryl, are you there? Or did Cheryl leave us?
Oh, no, I didn't hear my name. I am here.
Okay. So Cheryl, it is the noon hour. Did we want to take, say, a 30-minute break? Because I'd like not to break these next 15 if we didn't have to.
Yeah, I think that's perfectly okay with our team if we want to break and, even if it's 25 minutes and come back at 12:30, that'd be fine by me. But if you want a full half hour, you're the board chair and it's at your discretion.
Is the board okay with just coming back at 12:30? Okay.
That works fine.
Thank you very much. Then you can go ahead and stop the recording. And
So I'll take it down now.
Joe, thank you for starting the recording. Do I have my board back? I see Jeanette, Jay, and Ryan. Richard, I see. So I'm only missing Rachel.
I'm here.
Rachel's there. And so Cheryl, are you there as well?
I sure am. I think we can get started at your pleasure.
Thank you very much. I appreciate that. Okay. Welcome back. We will now proceed on to our next group. Most of these, if not all of these, are all LIHTC projects. Some we've seen, some are to come in yet. That not correct, Jason?
That is correct, Mr. Chair. And I also want to reiterate on these. When you're looking at the AMIs, the 9% are typically going to be less than 4% just because of the percentage of the total project has tax credits. So it's not an apples to apples comparison when you're looking at that.
Okay, we appreciate that. Before we get started, 2 issues. One, board, do you have any questions before we start? Okay, hearing none. And Jason, do you have any other instructions before we start?
I do not. We'll just go through these 15 projects and then we'll go back and kind of go through the point system again because it'll be a little different than the first 6 that you went through.
Okay, well, Jason, then it's to you in the first project, please.
All right, thank you, Mr. Chair. So first up would be Timberwolf Apartments. It is a 4% deal located in Kalispell, and they are requesting $2 million.
Hi, thanks, Jason. Can you guys hear me?
We can.
Yes, we can.
Perfect. My name is Joe Walsh. I'm with Boundary Development. We're a developer based in Bozeman. We develop housing across the state of Montana. I'm here to introduce the Timberwolf Apartments in Kalispell. Our ask is for $2 million in GO funds to support 216 units of new family affordable housing, all at 60% AMI. And this really is a family project. 142 of the units will be 2 and 3 bedrooms. We believe this is a great return on investment for the state's funds and is really a good case study for why this program was created. 2 million divided by 216 is only 9,200 per unit in subsidy and really does help fill that last piece to get this project off the ground. One quick note, our board packet shows 228 units. Since that was submitted, we've modified the unit count to 216 units, which is really the result of trying to make the floor plans more efficient. We previously had 36 plexes and 48 plexes, and we've gone to all 36 plexes, which keep the design costs lower as it's more consistent, as well as the construction costs. So first I want to set some context on the market in Kalispell. 11,000 new residents have moved to Flathead County since 2020. University of Montana market study in 2023 concluded a need for 15,000 new units over the next decade to keep up with expected demand. There are only 324 existing competitive affordable units in the market, and there are only 24 units that are in the pipeline that are LIHTC affordable. On the market rate side, there's also less than 1,000 units in the pipeline. So the market on affordable and market is coming nowhere near the expected demand and the growth. The result is market rate rents are very high. They range between $1,600 and $2,500 per month. And the average home price is up from $350,000 in 2019 to $650,000 today. So the market's really just unaffordable for probably 30 to 40% of the people who live there. And then when you look at expensive land, escalating construction costs, there's a lot of luxury homes getting built in that area that will continue to drive up construction pricing across the whole market. You're really just not going to see a lot of supply of new affordable housing getting built unless, projects are being able to tap sources like this and others. Looking at our project specifically, Timberwolf will have 216 units. It's 11 acres in North Kalispell. We're a half mile from Glacier High School. We're 2 miles from North Kalispell's commercial corridor, which has Walmart, Target, lots of food and beverage, restaurants, healthcare, and everyday amenities. We're 4 miles northwest of downtown Kalispell, and we're 13 miles from Whitefish. So we really serve both of those communities. As I mentioned, 65% of our units are for 2 and 3 bedrooms. So we're really leaning into the family component here, where we think the demand is very high, or the need is very high. And we're also doing a handful of family amenities to support that. We'll have a 1 acre park in the middle of the project. We'll have a playground, and then we'll have an amenity community center, which will have a state-of-the-art fitness center and yoga room and whatnot to really promote health and wellness kind of across the spectrum. In terms of just, it's critical on these projects to keep the price per unit low.
1 minute.
Not sacrifice. Let me get into the capital stack actually before I run out of time. So the total project cost is $58 million, 21 million and 4% tax credit equity. This is in a qualified census tract, so we have a 30% boost. The senior debt component is 26 million of tax exempt bonds. And the second lien position would be the 2 million of GO funds here. Above that, 4 million in subordinate tax-exempt B bonds, 750,000 in soft debt, and 4.4 million in deferred development fee. So the position of the Go funds is roughly 28 million in total cost, 28 million in basis, against a total project of 58 million. So a little less than 50% loan to cost. And if you look at the loan to value, it's somewhere in the 75% range based on our year one projected net operating income. So I think it's in a pretty safe position, and also will meet the 1.15 debt service coverage ratio in year one.
Time.
All right. Any
Okay.
questions?
Hey, thanks, Joe. Board questions for Joe regarding Timberwolf Apartments. Any board questions? Well, I do think, Joe, this is a nice location. It's an excellent location for the apartment complex of this size. Knowing Kalispell as I do, so I will make that comment.
We agree. Thank you.
Okay, do we have any public or questions for Joe regarding Timberwolf Apartments?
My comment, Bruce, and to Joe as well, is that knowing the valley quite well, the Kalispell growth is beyond belief. I am absolutely stunned by what is happening up there. I don't know how well it's going to hold up in truth, and Joe, you might respond to that, but it is, I just think it's out of control.
Yeah, I mean, I think the growth can only go so far as housing gets built as well, right?
Yeah.
If there's no housing getting built, it will be hard to continue to grow at that pace. But I think the demand is not going anywhere, and that's just going to continue to put pressure on the existing product, right? And
yeah, right. And that's why kind of brought it up, because there is no, it is so factual. I mean, you almost can drive. I mean, the new Costco store, I mean, you're almost getting closer to almost being in the city limits of Whitefish. They're moving that far north. They're not quite there, but it is really something for those that haven't been there.
Yeah, and a lot of these markets have Class B and C market rate housing, which is fairly close to LIHTC pricing or 60% AMI pricing. But when you look at Kalispell, there's really no cheap apartments, even Class B and C older product. It's all gotten fairly expensive. And so the 60% AMI rents are really 40% below almost anything in the market.
Yeah. Yeah, just was a comment. So.
Okay, thank you. Any other board questions or comments? Do we have any public questions or comments?
Seeing none, Chair Posey.
Thank you very much. Joe, thank you very much for the presentation. As I've said before, a lot of these we have already seen before, so there will be a lot less questions than there were with the previous group. So thank you very much. And Jason, let's move on to the next one.
All right, Mr. Chair. The next one is Elms Apartments. It's a 4% deal located in Kalispell, and it is requesting a $500,000 loan.
Thanks, Jason. My name is Grant Schnell with Mock Development out of Whitefish, Montana. The Elms is an existing fully occupied 60-unit senior community located at 330 3rd Avenue West in the heart of downtown Kalispell. It was built in 1981, and all 60 units are 1 bed, 1 bath. It carries a HUD HAP contract, and 41 of its 60 units are backed by Section 8 project-based vouchers. Those who are in the community know that there are little to no options for seniors on fixed income reliant on project-based vouchers. Seniors on Social Security are among the most vulnerable that we house in Montana, with some of the largest wait lists. Our goal is to preserve the Elms project-based vouchers and restrict the additional 19 units to 60% AMI with our 4% allocation. If the Elms converts to market rate or ages out, the HAP contract is at risk of going away. You cannot easily recreate 41 units of deeply affordable senior housing in today's market. The requested funds will be used to support the rehabilitation, giving this building another 30 years of life with improvements such as new windows, HVAC, water heaters, flooring, appliances, and cabinets. The result is a quality, energy-efficient product within walking distance and short distance of major services that the seniors rely on. We'll also be improving the building's existing community room and patio space. We have maximized the capital stack through private activity bonds, 4% tax credits, deferred development fee, and gap funding through the Montana Healthcare Foundation. However, we are still short and need additional funds. We pursued a loan through Montana DEQ's Multifamily Energy Retrofit Loan Program. Unfortunately, those funds will not work for this project due to their program constraints and closing timelines. We have been working with Montana NeighborWorks for added soft debt, but they have not been able to fully commit at this time. The funds we are requesting make this rehabilitation feasible. Without these additional funds, this project will be hard to move forward. We have requested our minimum amount needed, which is $500,000, equating to roughly $8,300 per unit. We are currently finishing our HAP transfer with HUD, and if awarded, we will be able to move forward immediately with a target closing and start of construction in September of this year. This loan locks in long-term affordability and protects 41 project-based vouchers serving extremely low-income seniors. It extends the life of an irreplaceable asset and prevents the displacement of the people who live there now and are dependent on the future of this building. Thank you.
Thank you, Grant. Do we have board questions? This is for the Elms Apartments in Kalispell. Grant, I thought I knew the project, but how many actual units are in this project?
There's 60.
60. Okay.
Yeah.
And the $500,000 needed here to complete your funding stack, that goes across all 60, or it's just some of the 60?
Goes across the whole project.
Okay. Okay. And if, in fact, NeighborWorks came through with the additional money, I assume you would not take this. You would take the NeighborWorks, since my understanding that's a grant and this would be a loan. Is that correct?
Matt, feel free to correct me if you're on, but I believe we would take this over that based on the loan terms.
Okay. Okay.
Yeah.
All right. Thank you. Other board questions? Okay, hearing none. Do we have any public questions or comments on the Elms Apartments in Kalispell?
Seeing none, Chair Posey.
Thank you very much, Joe. That being the case, Grant, thank you very much for your presentation.
Thank you.
Jason, back to you.
So next up, we have Woodward Flats. It's a 4% deal located in Bozeman, and it is requesting a $2 million loan.
Thank you, Commissioners. My name is Paul Keenan. I'm the Vice President of Development for Reuter Walton, and here to talk about Woodward Flats. Woodward Flats would be our second project in Bozeman. It's a 160-unit, 4% deal. 100% of the units will be rented to households earning less than 60% AMI, and 2/3 of those would be rented to families needing 2- and 3-bedroom units. The Beaumont is our other project that is in Bozeman. It's a 155-unit, 4% deal, very similar financing structure. It's 100% leased and maintains a waiting list of about 50 to 60 people trying to find a place to live. You may be asking yourself why another project in Bozeman. I know there is a number of projects in the pipeline, and a couple things I just want to highlight that kind of separates this project. One is its location. We are situated at 19th and Kagi, so just between, just west of Montana State, and kind of like the fastest growing neighborhood in Bozeman. So we're well connected now to jobs and transit in the city. We are not part of a master plan or have, some other contingency that requires a third party to put in infrastructure or perform in some way before we can go. We have everything we need to start the project. We are going through city approvals right now. This is the city supports this project very highly. We have submitted our site plan application and expect comments in just a couple months. So we're moving forward with our public approvals. And we'd be ready to close this project by around Thanksgiving. Our per unit subsidy request is relatively low at $12,500 per unit. I think I guess in terms of risk mitigation, it's a low per unit request and high likelihood of proceeding and getting paid back. So with that, I'm open to any of your questions.
Paul, thank you. Questions from the board? Paul, am I correct that we have not seen this as a 4% request as of yet? Is that correct?
We've submitted. Yeah, we've submitted. It's a relatively new submission, so it may not have gotten to you yet, but our application has been submitted.
But Jason, you've not presented to the board yet. Is that correct?
Correct. Not yet. Nope.
Okay. Just wanted to make sure of that. Okay. Thank you. Thank you both. Other board questions? Hearing none. Do we have any public questions and or comments regarding Woodward Flats and Bozeman?
Seeing none, Chair Posey.
Thank you very much, Joe. That being the case, Paul, thank you very much for your presentation. And Jason, back to you.
All right. Next up is Saddlehorn Apartments. It's a 9% deal located in Miles City. You've seen that one come through at the October meeting last year. It is requesting a $1.45 million loan.
Thank you, Jason. My name is Don Sturhan, and I'm getting some reverberation here, but can you hear me okay, or are you getting the reverberation as well?
Yeah, it is echoing, Don.
Okay. I don't know how to fix that. Let's see.
Don, do you have any other audio devices on or a headset nearby?
I do not. I am listed on the list though twice.
Then you may have joined the meeting twice, so maybe
Yes.
exit once and pop on back.
Pardon me?
If you've joined the meeting twice, I see you there. I'm looking to see
I
if you-
only see him once going down. I saw him twice earlier, but he's only listed once. Maybe try getting out and coming back into the meeting, Don.
Okay. I'll try that right now.
Okay.
And we'll wait for you.
Okay, I'm back. Do you see me?
Yep,
Yep,
I
you
see you.
sound much
and
better.
It's a lot better. Yep. You're good to go.
Well, thank you all. You're all being a very good sport already. So I appreciate that. Mr. Chairman, members of the board, pleased to present to you our loan request application for Saddlehorn Apartments in Miles City. I've tried to frame my comments here in short order so that they'll coincide and match your evaluation criteria. So I hope as I highlight the key points of the project, that's helpful to you. Starting with applicant experience and expertise. Our company is CR Builders LLC. You know the project. We submitted our application last year in the 2025 round and received an award of low-income housing tax credits. So you're also familiar with our company. Not to mention the syndication history we've had in Montana since 2003. We started CR Builders in 2011. We're very proud of our track record and our experience in the three-state area where we've developed 25 properties since 2011, and 21 of those have been LIHTC properties. So specific to Miles City and the Saddlehorn Apartments, once again, I'd like to note that we have received the tax credit allocation, so we have that in hand. And we have a full allocation of $8.5 million in tax credits. I'd remind you that this is the first LIHTC award in Miles City in the past 20 years. So we remain grateful for that confidence. Thank you. It's 30 units. It's 1 bedroom, 2 bedroom, and 3 bedroom. All 30 units are low income affordable, so it's 100% affordable. We've been doing some deep discounting on the rental rates. So our average income level is at 47.6% of AMI. Our sources in the capital stack are numerous and diverse, from the Housing Trust Fund of $1.15 million, home funds $863,000. We also have an award from the Montana Healthcare Foundation of $500,000. And then, of course, our LIHTC equity capital infusion from our investor limited partner. The tax credits have been sold. They've been sold to National Equity Fund. So we are under contract and underway. We're just now trying to secure the permanent financing. So this application represents our last layer of financing in the financial commitment for the capital stack. Previously, as was mentioned briefly by Grant Snell in his presentation, we were working with NeighborWorks for the capital magnet funds. And again, they had some difficulties with some shenanigans going on in Washington, D.C. this year that haven't totally been rectified. So the timing is uncertain, as is the amount of the allocation uncertain. So in reaction to that, given the fact that we're ready to go, we're ready to break ground, we've needed to pivot. And fortunately, an option and an alternative for us was the GO funds. This is a program that has very favorable loan terms, so it helps us immensely to maintain that deep targeting of 47.6% AMI. So we're pleased to move forward with this application. The loan structure, it's $1,450,000. We think that that's a fairly modest request, especially when you consider the other applications on the board. It's a good leverage position. I've already cited the other sources of funding we have in here. So this is really one of several different funding sources and layers of financing. It does represent a first lien position for the Montana Board of Housing. And at $1.45 million, it's a 14% loan to cost ratio. Very favorable for your position. So with that in mind, I would just like to hit a couple of distinguishing factors. Miles again serves the number of communities. It certainly qualifies and counts towards your rural funding obligation. We're ready to go. We're here and now. We're not looking to identify our funding sources. Those are in hand and intact with this go ahead. So this is our lead to start a construction. And in terms of readiness to proceed, we're right on the edge and looking for a favorable decision. So thank you for your consideration. Happy to address questions.
Thank you very much, Don. Questions from the board? We approved this project better part of 2 years ago as a 9%. Glad to hear he's got the tax credit sold. That's always important.
1 year ago, Bruce.
1 year ago, excuse me. That's right. I couldn't vote in those days. 1 year ago. Excuse me. Any questions from the board or comments?
No, it's great to see the progress.
Thank you.
Thank you, Richard. Any others? Okay. Hearing none, do we have any from the public?
Mr. Chairman, I might just note that Ben Ulick he was going to offer some comments in public comment, but couldn't stay with us all day long. So he had to attend another meeting. So I know that he did put some talking points into the chat room. So if you could
And I can go ahead and read those out. And this is from Benjamin Ehrlich. It says, "Good morning and thank you, Chairperson Mr. Posey. Sorry I had to get to another meeting, but wanted to present my talking points in support for the Saddlehorn Apartments in Miles City. My name is Benjamin Ehrlich, and I am a member of the Miles City Area Economic Development Corporation. Opportunities like Saddlehorn Apartments have been few and far between in Miles City. The project would represent the first award of tax credits in 20 years. Miles City is most certainly a rural frontier community that serves a wide berth of neighboring counties. It is the only housing project that would support communities east of Billings. A recent study conducted in 2025 by Great West Engineering for Cluster County revealed the following insights from local employers. 43% reported that their ability to recruit and retain qualified employees has worsened over the past 5 years. 83% cited affordability as a major concern. The lack of quality housing stock is a barrier to economic growth. 48% had employees refuse job offers or leave employment due to lack of suitable housing. This circumstance restricts the community's ability to attract and retain talent. 62% indicated employees or potential hires have difficulty finding housing. 45% identified the availability of affordable workforce housing as a serious problem, and 38% called it a moderate problem. 60% said the quality of affordable workforce housing is a serious problem, and 25% called it a moderate problem. As a community, we can't grow and improve economically if we don't have options for housing. Miles City is the economic hub of southeastern Montana, but the lack of available housing inhibits further economic growth and attraction of businesses. And that's what we got.
Thank you, Cheryl. Other public comments?
Good afternoon, Chairman Posey and members of the Board of Housing. This is Jim Atchison. That's ATCHISON. And I'd like to go on the record as the Executive Director of Southeastern Montana Development, also known as SEMDC. We are a regional nonprofit economic development group that does whatever we can to create economic activity within the 4 counties of Custer, Rosebud, Powder River, and Treasure. Of course, Miles City is in Treasure County, and we have been around since 1997. I've been there a little over 25 years, and we love serving this rural 4-county district. Thus, I'd like to strongly support the application before you from CR Builders and the Saddlehorn Apartments in Miles City. And want to stress three reasons. Number one, while we as an economic development group create jobs and tax base, the lack of housing in rural eastern Montana historically has acted as a parking brake on sustainable long-term projects and, of course, growth, just like what Benjamin said earlier. Number two, planning. My organization does numerous annual planning documents and studies, and our annual CEDS, or Comprehensive Economic Development Strategy, input sessions from 7 communities. All 7 of the communities that we serve in those 4 counties have listed over the last 2 to 3 years. Housing is number 1, and water infrastructure needs are number 2, and these are all significant needs. Of course, Miles City is one of my 7 communities that we serve. And finally, with several very large scale energy related projects coming to eastern Montana in 2027 and 2028, this will only impact housing or the lack of housing even more, especially with workforce housing. Thus, this is excellent timing on this rural eastern Montana opportunity that the Saddlehorn Apartments present, and I would encourage a green light by the Board of Housing on this request, as I feel this would be mutually beneficial for all parties involved. So once again, thank you for the opportunity to express my support for the Saddlehorn Apartments. Thank you.
Thank you, Jim. Other public comments?
Seeing none, Chair Posey.
Thank you very much, Joe. That being the case, Don, thank you for the presentation. Gentlemen, thank you for the support, and we'll move on to the next project.
Thanks for indulging me.
Go ahead, Jason. Did we lose Jason?
Sorry about that. I thought I hit audio, but I didn't. So
okay, no problem.
Next up, we have Franklin Crossing. It's a 4% deal. You also seen it on the 9% side last month. It is located in Missoula, and they are requesting a $5 million loan.
Good afternoon, and may it please the board. I'm Tyson O'Connell with United Housing Partners in Missoula. Thank you for allowing us to present Franklin Crossing for a Go Housing loan today. The packet you have summarizes our project, and we, as Jason said, we already presented Franklin Crossing in the 9% LOI round last month. So in the interest of time, I'm going to refresh you on the project details and the progress we've made over the last month, as well as address each criteria that you're considering today. First, the project and our experience in affordable housing. Franklin Crossing is a twinned 9-4 project with 192 total apartments, 41 apartments at 30% AMI, 33 workforce townhomes, and 17 funding sources, including $9.7 million in TIF and $3 million in donated land from the city of Missoula, as well as permanent affordability on the apartments. As UHP's founder, I've been working in affordable housing for the last 15 years, and I've been a partner in over 4,700 LIHTC apartments across 17 states. United Housing Partners has 3 primary values that we live by: transparency, teamwork, and grit. Because to complete complex projects like Franklin Crossing, you need great attention to detail, experience, and all stakeholders rowing in the same direction. We've created a special synergy on this project thanks to our partners, the City of Missoula and the Missoula Housing Authority, which currently serves over 4,500 residents in Missoula. Second, I want to cover the percentage of affordable homes in this project. All 192 apartments at Franklin Crossing will be deed restricted under 70% AMI, and 41 of those homes will be reserved for extremely low income folks earning 30% AMI. These 41 apartments alone are larger than many of the projects applying today. And because of how we've structured the land donation and the TIF award from the city of $9.7 million, all 192 apartments will remain affordable forever. Third, I want to talk about the need for affordable housing in Missoula. Missoula continues to have some of the state's greatest need for affordable housing, and it ranks as one of the least affordable housing markets in the state. But it lacks Bozeman and Kalispell's infill opportunities and Bozeman's DDA, which will bring more than 3,500 units to Gallatin County in less than 5 years. Fourth, I want to cover the priority and the board's lien position. Despite the complex capital stack of 17 different sources, the Go Housing loan covering just 8.6% of the 4% project funding and 7.5% of the total funding will be in second lien position on the 4% project, behind only the primary mortgage. Fifth, related to the lien position, I want to talk about the other loans on the project. There's 17 other sources, and the crucial Go Housing loan is only 7.5% of the total sources, as I just said. The reason Franklin Crossing is able to include 192 units with 41 units reserved for 30% AMI and permanent affordability is all based on leveraging the resources and giving the board the greatest bang for their buck. Six, the project's location in Missoula is ideal. It's in a redevelopment site in Midtown, close to the hospital, jobs, Fort Missoula, the Southgate Mall, and it's located on the Bitterroot Trail and overlooking Emerald Park. And seventh, the loan size and geographical distribution. I just talked about the leveraging of the loan size for the $5 million loan and what the board would be getting.
1 minute.
16 projects vying for Go Housing funds today. Franklin Crossing is the only project in Missoula. Next, I want to talk a little bit more about that leverage and those 17 sources leveraged with a 9% award and a $5 million Go Housing award will turn in 192 permanently affordable homes and a $66 million development. That's an impactful investment for the board. And finally, I want to talk about the community contribution. Missoula's already committed $9.7 million in TIF and $3 million in land to the project. And since our 9% presentation last month, they've assigned 2 project managers that are focused on cutting red tape around entitlements and zoning so this landmark project can be built as quickly as possible. Thank you for your consideration for today, and I'm happy to answer any questions.
Thank you, Tyson. Questions from the board? Tyson, you indicate that this would be in a second. How much is the first going to be?
14 million for the primary mortgage on the 4% loan, Bruce.
Okay. And you said this was a $62 million project?
66 million for the total.
Okay. So we're in a $16 million position against 66 is what you're saying.
Yes, sir.
Okay, thank you. That's what I thought. I want to make sure. Other board questions? Hearing none, do we have any public comments and or questions regarding Franklin Crossing?
Yeah, go ahead, Andrea.
Hi, Chairman Posey and members of the Montana Board of Housing Board. Assuming you can hear me, I'll go ahead and make my remarks quickly. Andrea Davis, Mayor of Missoula, and I'm here to strongly support and endorse Franklin Crossing. As you're aware already through presentations, the City of Missoula is very pleased and honored to support this project because we have long been aiming to redevelop with meaning this project site for a number of years. This area in Midtown, which was acquired at a discount from the Montana Rail Link, has long been poised for redevelopment. This project is an incredible opportunity for us to achieve significant goals that we've outlined in our city's housing strategy, A Place to Call Home, and others related to addressing not only workforce housing needs, but also needs that impact people living on fixed incomes and those that are coming out of homelessness. And because this project meets a whole host of different income types, but in particular, a great number of homes at 30% area median income, we're able to achieve a great number of different housing goals, including, and one that's not part of the presentation today because it's ancillary, is the opportunity to meet market rate home ownership with this project site with about 30 market rate homes. Not part of your consideration today as far as this loan, but the overall project meets a very diverse set of home types. The City of Missoula is ready to put our money where our mouth is because, like I mentioned, this area is in our Urban Renewal District 3. We are not only willing to donate the land and contribute the land value for this project, but we are also contributing up to $9.7 million in tax increment financing that both supports public infrastructure as well as workforce housing, bricks and mortar. And so I just wanted to mention again that while housing is urgent across the state, and in Missoula, we just have continued to have well-documented shortage, persistently low vacancy rates, and widespread cost burden, almost with no affordable options for households that are earning between 30 and 60% of the area median income. This project is ready, it is needed, and it has the full backing of the City of Missoula. Thank you very much for allowing me to speak today. I'm available for any questions you may have.
Thank you, Andrea. Any other public comments?
I'd like to comment. I'm Julie Lacey with the Missoula Economic Partnership.
Go ahead, Julie.
Yeah, thanks. Since MEP last commented on this project, Ronald Kurtz, Assistant Secretary for the Housing and Urban Development, came to Missoula. He visited Josh Smith, founder and CEO of the Montana Knife Company, what we refer to locally as MKC, a company that's grown from about 30 to nearly 130 employees in just a couple years. To grow, MKC has invested millions of dollars into a new facility, advanced manufacturing equipment, and training its growing workforce. Josh Smith shared with the secretary that he isn't losing sleep over his investment in a new facility. He trusts his customers and training its growing workforce. He isn't losing sleep over his new equipment. He believes in his people and in training them to use the equipment to push the company forward. but he is losing sleep over the ability for his current and future employees to find the housing types they want so they can build secure lives in Montana. It's the one headwind we can't overcome without all our help. Assistant Secretary Kurtz noted that Missoula Project, like Franklin Crossing, reflects some of the best work he's seen from local communities leveraging federal support to address housing affordability. MEP is asking you to approve this funding request so that the state and federal government can be key members of this exciting public-private partnership that supports entrepreneurs like Josh Smith and fosters economic growth in Western Montana. I thank you for the ability to comment, and I'd be available for any questions. Thank you.
Thank you, Julie. Other public comments?
Mike Nugent, go ahead.
Thank you, Mr. Chair. I'm Mike Nugent. I'm the City Council President in the City of Missoula. And I've spoken to you before about this project, so I will not be repetitive. But as you know, City Council is not a full-time job, so I also work in that housing world and have for the last almost 2 decades. And in both of those roles, I just want to show up and continue to state my support for this project. I think this is as good of a concept and idea as we can see. LIHTC apartments and market rate home ownership on the same campus side by side, creating a neighborhood is, as I mentioned last time, I think a real winner for any town and would be great for Missoula. But I also love that this is a true public-private partnership. The city, the Missoula Housing Authority, United Housing Partners, all bringing their strengths to the table to ask for this $5 million GoFunding as part of a $66 million project. And as you heard Mayor Davis say, the city is fully invested in this project with millions of dollars. And I think it's a testament to how we can make different public resources match private funds to this housing stock to make a great unit happen. Also, the 41 units at 30% AMI is some of the deepest affordability I've seen. And I just think that is a testament to the creativity of our housing authority and Tyson and his team at UHP. And they all have a track record of getting this done. Our housing authority manages LIHTC projects all over town to great success. United Housing Partners have done projects in multiple communities and done them well. And I think that this location specifically on the edge of Midtown kind of completes the circle from an underused city land to a neighborhood anchor that we think will serve Missoulians for generations to come. And so I just want to continue to express my support individually as well as the council's support on this project, and I'm available for any questions.
Thank you very much, Mike. Other public comment?
Hi, this is Melanie Brock. I am the Executive Director of the Missoula Midtown Association. I wanted to thank you so much for your consideration of this funding request, and not to be duplicative since I had the opportunity to visit with you last month. I just wanted to reiterate that over the last 5 years, we've seen potential affordable housing projects in this core district in Midtown, and none of them have been able to come to fruition. And when we did our master plan, it was identified that this is a neighborhood most at risk of displacement as Missoula grows, as we have not been able to do a big scale affordable housing project in this urban core. So this is absolutely our moment in time to partner with you, using every possible resource we can to make this project happen. So we'd be so grateful if you please help us with this additional step that we need to make sure that we don't have to decrease housing units here, as this is our this is the gold project for making this neighborhood stay affordable and allowing more families and seniors to live close to services and at the urban core. So thank you so much, and we would be grateful if you'd please approve this funding.
Thank you, Melanie. Other public comments, please.
Yes, Mr. Chairman, the board. My name is Sam Oliver. I'm the Executive Director of the Missoula Housing Authority. Franklin Crossing represents a tremendous community collaboration, and it's happened fast. In just a few short months, as a matter of fact, these entities, the Missoula Housing Authority, United Housing Partners, and the City of Missoula, have embraced this generational opportunity to pledge housing in our vibrant Midtown neighborhood. The Housing Authority is really excited to partner and bring an increased spectrum of housing to this part of town. This ambitious and impactful project would not be possible without the Go Housing Loan Funds, and we greatly appreciate the board's consideration today. Thank you.
Thank you, Sam. Other public comment? Any other public comment?
Seeing none, Chair Posey.
Thank you. Tyson, I have a question for you. I assume you're still on.
Yes. Yes.
As always, you have one of the more complicated financing stacks. Is this the last approval you need in your financing stack?
The 9% award would be the last approval that we need in the
Okay. But
that we applied for this year.
Okay. All right. That's what I was getting, and I'm sorry, I should have mentioned 9%. Okay. Any other public comments or any other questions from the board?
Seeing none, Chair Posey.
Thank you very much. Thank you, Tyson. Thank you
you.
all commenters. And I'll move back to Jason.
All right, next up we have Canyon View. It's a 4% deal located in Hamilton, and it is requesting a $2.25 million loan.
Hello, Chairman, members of the board. My name is Cole Harden, and I serve as the Executive Director of Sapphire Lutheran Homes. Thank you for this opportunity to speak to you today regarding Canyon View project in Hamilton and our request for $2.25 million of GoFund loan. Canyon View is a 24-unit USDA rural development senior housing preservation project located on the Sapphire Lutheran Homes campus in Ravalli County. This is a project we've been working on to preserve and improve since 2022. And we believe the timing, the partnerships, and financing tools have now aligned to make this possible. I wanted to address the board's criteria directly. First, applicant experience. Canyon View brings together Sapphire Lutheran Homes and St. John's United, two mission-driven nonprofit organizations committed to senior housing and affordable housing preservation. The most relevant example that I can give in our experience is the Manor, a 60-unit HUD-assisted bond project on the same campus, also structured as a partnership between Sapphire Lutheran Homes and St. John's United. The Manor's grand opening was held a little over a week ago, where we were grateful that the Montana Board of Housing was a part of that celebration. Canyon View is smaller, but layout of the units and the improvement scope are very similar. The same local general contractor, Rod Turner, has agreed to serve as a general contractor for Canyon View, giving this project practical and a proven path from approval to construction. Second, the percentage of the units serving low-income households. Canyon View preserves 24 units of affordable senior housing, and 100% of those units are and will remain affordable to low-income households to provide and will provide RD rental assistance. Third, community in the need. The Manor market study showed 1.5% vacancy rate and Hamilton's ability to absorb 157 additional units before reaching 5% vacancy. Our campus operates at and above or at an average vacancy rate of under 2%, but the need is more than numbers. At the Manor grand opening, one of the residents recently shared that the Manor is the first home she's ever lived in where she felt safe. That's the kind of housing that Canyon View will preserve. Fourth, the lien position. The $2.25 million GoFund loan will be in the first position. The $2.9 million seller note and the approximately $630,000 of USDA RD 515 loan will be in the subordinate positions. Fifth, project location. Canyon View is a part of a broader Sapphire Lutheran Homes campus, which includes affordable senior housing, market rate housing, senior housing and memory care. Residents have access to services and supports through Sapphire Lutheran Homes and is just a block away from our medical. Sixth, loan size and geographic distribution. Canyon View is the only GoFund request in Ravalli County. This request gives the board an opportunity to direct GoFund resources to a smaller rural community where the projects are harder to finance and where senior housing would be extremely difficult to replace. Seventh, the leverage. The project includes 4% LIHTC equity and existing USDA RD 515 loan reserve funds, deferred developer fee, and $2.9 million of seller note. The Go Fund loan leverages more than 6.9 million of other funding sources, or more than $3 for every $1 of Go Fund loan. I also want to touch briefly on a number of other considerations. On income levels targeted, this project preserves an important RD housing resource. Today, 21 of the 24 units have RD rental assistance. Through this project, our goal is to preserve the existing RD structure and work with RD to increase rental assistance coverage for all 24 units, which would be a major benefit to our residents with very limited income. On project efficiency, the timing creates a rare opportunity. Hamilton, for the first time, is located in HUD's DD area for 2026, creating a one-year window for Canyon View to qualify for the 130% basis boost on the 4% low-income housing tax credit. That boost is critical to making this smaller 24-unit rural preservation project feasible. Our community contribution, the $2.9 million seller note, represents approximately 32% of the capital stack and is a major demonstration of our commitment to preserving Canyon View for affordable housing. That is why this request is so important. The Go Fund does not simply fill a gap, it unlocks the entire project. Thank you for your time, and I'd be willing to answer any questions.
Thank you, Cole. Questions from the board? Jason, again, is Canyon View a 4% we've already seen or one we're going to see?
It hasn't came up yet. You guys will see it though.
Okay, but that's my question. It's one yet to be seen. Okay. Other board questions? Okay, hearing none. Do we have any public comments or questions?
Hello, can you all hear me?
Yes, we can.
Good afternoon, Chair Posey, members of the board. My name is Matthew Rohrbach, Hamilton City Planner. Hamilton Mayor Dominic Fahrenkopf was unable to attend today, but did ask me to convey the city's strong support for Sapphire Lutheran Homes application to preserve the Canyon View apartments. Hamilton has a critical and growing need for affordable senior housing. Residents over 65 now make up an estimated 1/3 of our population, and 2/3 of our senior renters are cost burdened. Canyon View directly serves this population, and its preservation is both a community priority and it directly furthers affordable housing goals in the city's comprehensive plan. The City of Hamilton respectfully urges the board's favorable consideration of this application. Preserving the Canyon View apartments will safeguard a vital and irreplaceable piece of Hamilton's affordable senior housing stock. Thank you for your time and consideration.
Thank you. Other public comments?
Seeing none, Chair Posey.
Thank you very much. Thank you for the presentation. Jason, let's move on to the next.
Okay, next up we have LB Lofts 9. We also have LB Lofts Laurel Gardens 4%. So I guess we could take them separate or combined. I guess up to you, Mr. Chair.
Let's take them together.
Okay. So this is a 9.4%. It is in Billings and Laurel. It is asking for $2 million on the 9% side and $5 million on the 4% side.
Quick question before we start. Do I do 10 minutes for this or just 5, or how do you want to do this, Mr. Posey?
I think 5. We've seen these projects before, so 5 should still be ample time.
Okay.
Agreed. Thanks, Chair Posey and I'm board. I'm happy to say that I already intended on keeping these projects together and keeping it at 5 minutes, so I'll do my best to be efficient on this. My name's Heather McMillan, and Homeward is the developer on this project, and the Homefront is the owner on this project, as a reminder for some of the newer board members. We've worked to give you guys detailed updates the last 2 months in writing. So I just wanted to give you some current updates that are happening on site. The pods have been moved off site to accommodate site prep, and we're going to have some construction savings and logistics with them stored elsewhere and being delivered back on site. Laurel Gardens is done with their construction documents and were submitted for permit for those 30 homes we are rehabilitating in Laurel. LB Lofts, we are finalizing our design revisions and completing the construction documents this month and submitting for permit later this month. We have incorporated design changes for cost savings that actually shifts the 9% project from 22 units to 24, and the 4% project will have 78 units of LB Lofts plus the 30 at Laurel Gardens. This will generate 1 additional unit, so we do not need to ask for a reduction in units with the cost savings. We just eliminated a building and did all 6-unit buildings. We're working with our closing team, Raymond James and Glacier Bank, to close late summer. You'll see a bond resolution from us next month at your board meeting. This restructured twin project has combated significant market impacts, greatly reduced credit pricing, higher lending rates, increased material pricing, but I'm happy to report that the Glacier debt is secured, the Raymond James equity is secured. Homefront has committed some very valuable public housing disposition resources as soft debt. And we also have allocations of home money from the state to Laurel Gardens and from the city to LB Lofts. So these 2 requests for these very valuable Go Montana housing funds complete our funding packages and allow us this twin project to move forward to closing late summer and begin construction this fall. Homeward and Homefront appreciate your consideration for a commitment today. Thank you, and I'm here for any questions.
Thank you, Heather. Any questions from the board for Heather? Any questions from the board? Any questions or comments from the public regarding LB Lofts and LB Lofts Laurel Gardens?
Seeing none, Chair Posey.
Thank you very much. I would remind the board that although in this case we had both presented once, and I'll ask the next one to be presented as one as well, these are still separate requests. So when it comes to your voting, you may want to support the 9 and not the 4, the 4 not 9, or the both. You have that option. So I just want to reiterate that. So with that in mind, let's now proceed on to the towers. Go ahead, Jason.
Yep. Next, we have Towers 9% and Towers 4%. They're both located in Billings. Towers 9 is requesting a $1.3 million loan, and Towers 4% is requesting a $2.5 million loan.
Great, thank you, Jason. And again, it was my intention to try to do both these projects at once and keep it to 5 minutes, so I'll do my best. As a reminder, these 9% credits were awarded last fall. It is a combination of Sage Tower and Fraser Tower, 2 senior properties in Billings. There's 81 homes at Sage and 64 at Fraser. This is a twin project. I want to express that we're thrilled that we have secured terms with U.S. Bank for 83 cents on the dollar for equity. That's higher than most equity that we can get currently. We've secured reasonable loans from U.S. Bank as well. They're required for the equity, and we are covered on our construction loans. So this request we're making today is the permanent funding solution, permanent mortgage solution that is really advantageous for this project. These Go Montana housing funds are a perfect complement and for the permanent debt on the towers. And we expect to do a fall closing. We're working quickly to recycle all of our learnings from Creekside, similar structure on all the project partners. We're recycling our EQ2 funds through NeighborWorks Montana, from Glacier to NeighborWorks Montana, and reloaning back to Sage. And so we are looking to start start the rehabilitation by the end of the year. Let's see. Yep. Our asset team has been working closely with property management on several fronts. We're readying Sage and Fraser for this resyndication. We are working with our regional HUD rep to bifurcate Fraser's HAP contracts to assign 1 to the 4 and 1 to the 9, and then assign each side it's assigned Sages to the 4% side, along with the HUD-backed mortgage that we want to reuse because of advantageous funding. We are also pulling all existing tenant files and qualifying all the 60% area median income residents as existing qualified tax credit households because this is a resyndication. And we're qualifying all new home, housing trust fund, and 50% AMI residents shortly after closing. We have all of our funding capital, all of our funding in place. We've been awarded our home money from the city, CDBG money from the city, and housing trust fund money from the state. We are also working to solidify some property management protocols on a pest situation we've been keeping staff updated on. The treatment has occurred and is ongoing, but the asset team and the hired professionals will also feed us the development team any design solutions that may assist with ongoing management to include in our rehabilitation scope. These requests for the very valuable Go Housing Montana funds will support the current closing package and allow this twin project to move forward to a fall closing and have that rehab start before the end of the year. So again, Homeward thanks you and is available for any questions.
Thank you, Heather. Do we have any questions from the board for Heather? Any questions? Hearing none, do we have any questions or public comments regarding Towers 9 and Towers 4 in Billings?
Seeing none, Chair Posey.
Thank you very much. That being the case, go ahead.
There may be one. Was it Liz?
Oh, no, I was just prepping for my next
Okay.
presentation.
Okay, perfect. I thought you had a comment. Sorry.
Okay. Hearing none, Heather, thank you very much for the two presentations. And Jason, back to you.
All right, next up, we have Eagles Manor 4%. It's located in Helena, and they are requesting a $2.5 million loan.
Alrighty, well, good afternoon, board members. My name is Liz Mogstead, and I serve as the Housing Director for Rocky Mountain Dale Council, which is our local HRDC. Thank you for the opportunity to speak today about Eagle Manor residences in Helena and our GoFund loan request. This is the only request in our Tri-County area and a vital piece of a large-scale preservation project. Eagle Manor has been home to seniors and people with disabilities for close to 60 years. Most of our residents are on fixed incomes and would be extremely rent burdened without this property. In fact, 2/3 of our residents are below 30% AMI and almost 90% are under 40% AMI. Along with the income barrier, accessibility is a huge issue in a city that's built up the side of a mountain. Almost half of the people we serve have a disability, and fully accessible apartments are in short supply. If this building fails, there's no other place for them to go. This project includes 139 apartments across 3 physically connected but operationally separate properties: Penn K Eagle Manor, Eagle Manor 2, and Eagle Manor 3. 3 properties, 1 preservation plan, and 139 homes we cannot afford to lose. For Rocky, this is exactly the kind of work we're here to do. We have a long history of serving low and moderate income households in Lewis and Clark, Jefferson, and Broadwater counties with an affordable housing portfolio of 382 units. We are partnering with GL Development, who has extensive affordable housing financing and development experience, and our goal is to make sure these homes are still serving the Helena community decades from now. Eagle Manor will preserve the 139 affordable homes, and 100% of the units will be income restricted. So we'll continue serving seniors and people with disabilities, and our 8 existing market units will become rent and income restricted, increasing total affordability. The need for this project is not theoretical. 2 of these properties were developed in the late 1960s and early 70s. They've served Helena well, but major building systems are now approaching 60 years old. We have been diligent in funding reserves, fixing leaks, elevator failures, boiler issues, but replacement reserve accounts were just not intended to replace these entire building systems. If we wait, the problems do not get smaller, the costs do not go down, and this disruption to the tenants does not get easier. Eagle Manor gives us the chance to act now while these homes can still be preserved responsibly. The rehabilitation will address life safety improvements, security, plumbing, electrical, HVAC, kitchens, bathrooms, accessibility. None of this is flashy, but is the work that determines whether residents can live safely, comfortably, and with dignity. The project also protects important federal rental assistance. Today, 53 of the units have HUD project-based Section 8. We intend to preserve these vouchers and have had preliminary conversations with both the local and state PHA about adding more. We're optimistic that Eagles will receive additional budget authority so more households can benefit from project-based assistance. Because we are required to wait until after the project is placed in service in order to add these vouchers, we've included a capitalized tenant rent protection reserve to help absorb incremental rent increases over the next 10 years. Financial sustainability cannot come at the expense of the seniors who already call Eagle Manor home. There's also a practical, resident-centered improvement in this plan. Eagle Manor has historically had a mandatory meals program, but loss of funding and increased cost has made the current model unsustainable. Resident surveys show only about half of them would choose to participate if it were optional. And because Rocky provides transportation to our dining room at the senior center and operates the Meals on Wheels program, we're in a unique position to seamlessly transition our residents to a more sustainable model that reduces their out-of-pocket costs. We'll also improve the kitchen layout in all the studio apartments to give them the choice to prepare food independently. Nothing mandatory, better kitchens. I think we can all understand that appeal. So the GoFund request is modest compared to the size of the preservation effort. We're asking for $2.5 million in a $38.9 million project, which is less than 6.5% of the permanent capital stack.
1 minute.
This leverages approximately $36.4 million from other sources. That is more than $14 of other funding for every $1 of GoFund loan. Rocky is making two major contributions. We're doing a $6 million seller note and a $9.3 million general partner capital contribution. That $9.3 million is not a loan to be repaid through rents. It is real capital we are investing in this project to make preservation possible. We're not asking the board to pay this project. We're asking the GoFund to be the piece that lets the full preservation plan come together. We're protecting 139 homes in a regional center for employment, healthcare, services, and government. It's preservation at scale. It's the kind of investment that prevents a much larger problem later. Housing preservation is not glamorous work. It's roof systems, reserves, rent protections, and 1,000 details that residents should never have to worry about. But when it's done right, our most vulnerable community members get what every Montanan deserves: a safe, stable, affordable place to live. This is why we respectfully request approval of our $2.5 million GoFund loan for Eagle Manor residences. Thank you for your consideration, and I'm open for any questions.
Thank you, Liz. Questions from the board? Liz, what position will the $2.5 million be in?
It would be in the second position, right behind the permanent debt, like traditional.
And how much will the permanent debt be?
It is $6.6 million.
Okay, so we're talking $9 million against your 30-some million. So okay. And if I look at information Jason has sent me, again, I'm just trying to wrap my mind around where all these projects are in their process. This one has not yet come to the board, but will, as a 4%, but will be coming, correct?
Correct.
Okay, thank you. That answers my questions. Other questions from the board? Hearing none, do we have public questions and or comments on Eagles Manor in Helena?
Seeing none, Chair Posey.
Seeing none. Liz, thank you very much for your presentation. And Jason, back to you.
Okay, next is North Park 4%. It's located in Billings. It's they're asking for a $4 million loan. And I will just say that they have not been to the board yet, but they will be here in the next couple months.
Thank you, Jason. My name is Chase Huber. I'm the development manager for Devco Residential Group. The North Park Apartments project is located in the center of the East Billings Urban Renewal District that was established in 2006 with the goal of revitalizing the downtown industrial core into a mixed-use corridor for housing, shopping, and entertainment. The North Park Apartments will be the first low-income housing project within the district, offering future tenants access to the amenities within the district and providing a pipeline for employment. The piece of land the project will be built on has been subject to environmental contamination dating back to the original Phase 1 report from 1998, which identified a petroleum release from neighboring rail lines and a floor drain in a now demolished 1958 auto repair shop, which was discharging waste into the subsurface. In 2017, the Big Sky EDC leveraged $125,000 in brownfield funds for the remediation of asbestos, lead, petroleum products, and other contaminants referenced in the contamination of building materials, groundwater, and the soil. The cleanup work was completed in 2022, noting the presence of both groundwater and soil contamination was remediated through natural attenuation. Monitoring wells were installed after this work was completed and were removed in 2023. DevCo has conducted extensive environmental studies and determined there is no additional cleanup required for the site, but the demolition of the existing warehouse on the site will likely require remediation. The project will consist of 1, 2, 3, and 4 bedroom units dedicated for families at 60% of AMI. The project will include a playground, dog park, walking paths, bike storage, in-unit washers and dryers, a fitness room, a clubhouse dedicated to residents. The project will also partner with Rainbow Housing Partners and provide their Link Connected Services program to all residents free of charge. The Link program offers a comprehensive services program to residents through online education classes, one-on-one teaching, and individual resident profiles to give residents the tools to improve their lives and economic standing within the community. Currently, the project continues to progress on the entitlement front. It has received site plan and civil engineering plan approval and submitted building plans to the city building department with permits expected in August. If awarded financing, this project is ready to proceed and will be able to move quickly to a closing. In summary, the North Park Apartments project is developed by an experienced developer with an extensive history of developing low-income housing projects across the country and a track record of completing projects in the state of Montana. The project will satisfy a tremendous need within the Billings community, particularly in the East Billings Urban Renewal District, which is in need of housing to uplift the district. The project will transform a site with a history of blight and turn it into a trophy asset within the community. The MBOH loan would sit in second position behind the primary permanent mortgage. In addition to the MBOH loan, the developer will also be contributing a $2 million cash flow note, as well as deferring 80+% of our developer fee in order to get this project constructed. Most importantly, this project is ready to proceed with permits expected in the fall of 2026 and closing expected shortly thereafter. I am happy to answer any questions for the board.
Thank you, Chase. Do we have questions from the board? Chase, would you, because I reviewed everything yesterday, would you remind me of the exact location of this in the eBird?
It is, the address is 1406 6th Avenue North.
Okay, so it sits right on 6th.
It does, yeah. There's a old warehouse building and a lay-down yard on the site currently.
Okay. All right, thank you. Other questions from the board?
I have one for you. In the write-up here, it says the history of this site has been a challenge for development with numerous failed housing projects over the years. I wonder if you can comment on why those projects failed and why you don't think yours will.
I can't specifically comment on why they failed. I do know there was a permanent supportive housing project proposed, which was the result of a lot of cleanup work done with the brownfield funds in 2022 and 2023. I'm not sure why it failed. I would say, our project at this point, our capital stack is fleshed out. We have term sheets with our equity and debt partners. Permits are shortly in hand. We're well capitalized. We execute transactions like this all the time. We actually walked away from this site in late 2024 and picked it back up in early 2025 because of these funds. Without these funds, this project really just doesn't work. And on top of that, we're already, we're contributing a $2 million cash flow note that'll sit behind everything. So our own capital will be in this project for 15 plus years. So we're maxed out in terms of what we can contribute to the project and really looking for this allocation of funds to get it over the hump and get it built.
Thank you.
Other board questions? Do we have any public comments or questions regarding North Park?
Hi.
Yes.
Hi, yes, my name is Heather Doty. I serve as the director for BirdWorks and the liaison for East Billings Urban Renewal District. I'm here to speak in support of the North Park Apartments. In many ways, this neighborhood has spent 20 years preparing for residents. We've been laying the foundation. North Park Apartments represents an opportunity to bring that vision closer to reality. This project is more than housing for us. It's a catalyst project. It turns years of planning, investment, and belief into something tangible. It brings new life to a neighborhood that has worked hard to create positive momentum and position itself for this type of opportunity. It helps connect the investments that have already been made with the people who will ultimately benefit from them. It helps turn an area long known as a place to work into a place where people can also live, gather, and build community. North Park Apartments is exactly the type of apartment or project that Urban Renewal is created to support. It represents a culmination of over 20 years of effort by people who believed this neighborhood deserved investment and opportunity. More importantly, it represents the opportunity to take the next step, to move from planning to reality, to move from being a neighborhood people believed in to a neighborhood more people can call home, and to help create the kind of neighborhood that East Billings has been working towards for the last 20 years. Thank you for consideration and support of this project. This would be as Chase said, the only large-scale housing over in this area. To your point on where this is located, it's actually directly across from where Crazy Mary used to be and where she is right now. Those are our businesses who need projects like this down here. Thank you.
Thank you very much. Other comments or questions?
Seeing none, Chair Posey.
Okay, that being the case, thank you very much for the presentation. And Jason, back to you.
All right, next up we have Glacier View Senior. It is located in Columbia Falls, and they are requesting $2.3 million.
Thanks, Jason. Good morning, Chair Posey, members of the board. Alex Burkhalter from Housing Solutions. We're the developer of Glacier View Senior in Columbia Falls. And I tell you, in preparing, I learned a new word. It's triskaidekaphobia, which I learned means it's the fear or phobia of the number 13. We ended up to be number 13 here. But the good news is with a total of 15, you've almost made it to the end of this marathon. In the interest of that, and that you just heard about this project a month ago at the 9% LOI selection, I'll keep my comments brief. As presented then, our request is for a $2.3 million GO Housing Montana Fund first position mortgage. It'll be secured by the 29 new senior homes. In May, you invited the project forward in the credit round, and this loan will deliver the project you responded to. A couple of the main storylines here, the community. It's been 24 years since there's been a funding of an affordable housing project in Columbia Falls. I think Tyler put it well when he said back in 2002, we were all using Windows XP. Does the startup sound still come to mind? Why senior? Columbia Falls, over 36% of the population currently is 55 and older, and that's only expected to grow over the next century. The city's own housing study completed in March of 2025 bears this out. It said all senior properties are full with wait lists from several months to over a year. And one of the projects, representing 24 units, is currently facing expiring affordability restrictions. So we're looking to add to what's already there and try and meet the incredible need. I think Amber said it really well. when she said Columbia Falls is suffering from big city housing problems in a small community. The projects itself, again, just a quick overview, 29 senior homes, 21 bedrooms, 9 2-bedrooms in our standard elevator building. 6 of those are fully accessible. Also, and I think worth pointing out, and we talked about this in May, we worked really hard to push our rents deeply, make them deeply affordable with 8 units at 30%. That represents rents at $540 and $650 per month, respectively, for a 1 and 2 bedroom. And that's all in with all utilities included. Puts us well below $1,000 a month savings on market comps. And those are a big deal. Saving $1,000 a month is like having a rental subsidy without taking up one of those precious vouchers. We did commit to make the project permanently affordable, so it'll be affordable in perpetuity, going beyond the 50-year requirement. And I would just say that, this loan is what makes the difference for us. The lower interest rate loan is what lets us push deep into those AMI set-asides. We didn't invite the city manager back to comment again, being just a month ago, but he brought up a few things that I think bear repeating. One is that the city is facing a crunch on its infrastructure, specifically its sewer capacity. That's capped. They've got a couple large developments in the wings, and they'd really like to see this one get done before they run out of space, so to speak.
1 minute.
Okay, so I guess in closing, what I'd want to just reiterate, our team has a lot of experience in Montana. We recently opened 2 projects. We've completed 15 in Montana. It's been nearly 25 years since Columbia Falls has seen a project. We have strong city support, and this loan supports truly deeply affordable rents. Happy to answer any questions.
Thank you, Alex. Are there any questions from the board on Glacier View Senior? Any questions from the board? Realizing you saw this project just a month ago, so. Okay. Do we have any public comments and or questions?
Seeing none, Chair Posey.
Thank you very much, Joe. That being the case, Alex, thank you for your presentation. And Jason, back to you.
All right, next up is Henley One. It's a 4% located in Great Falls. They are requesting a $3 million loan. I just want to let you know, Blake Jumper, who works on this project, he said he was on at 8:30, had to get off at 1 p.m., didn't realize it was going to go this long. If you wanted, I could answer some questions if wanted. There was one thing to be pointed out. I know he wanted to point out. It's bold in the cover letter. So if you think that's okay for me to point out, that'd be fine. It's up to you, Mr. Chair.
Go ahead. If he's giving you some
they did submit.
latitude.
What's that?
He's giving you the latitude. Go ahead.
Okay. They did submit an application back in December to preserve the QCT that they have in Great Falls because it was going away. So there's no longer a QCT. So as written in his cover letter, and it's in bold, said if we cannot secure the GO funds in 2026, it's likely this project will dissolve with no assurance when another QCT or DDA in the region will be instituted. So just pointed that out from his cover letter.
Okay. Any questions? I guess we can't ask of him. Does the board, I guess, have any comments on the project? There was a narrative write-up on it. Any comments at all on the project? Are there any public? This is in review, right, Jason?
It is. We have had it, and we've just been waiting. He basically put it in to preserve the QCT and then wait for this for June to come along. So it's just been in a holding pattern until this meeting.
Okay. Very good. Any public questions or comments regarding this? This is the Henley 4% in Great Falls.
Jason, this is Jeanette. Do you know about the funding stack? Do you know anything about that?
Yeah, let me pull it up here. Just got it right here. Funding stack. So the first mortgage permanent debt would be about $24.5 million, and then the second mortgage would be this one at $3 million. Deferred developer fee as well, and about $22 in housing credits.
Okay, thank you.
Other questions?
Seeing none, Chair Posey.
Seeing none. Thank you very much, Joe. Then let's move on to number 15, Mountain Goat Court. Jason, to you.
All right, Mountain Goat Court. It is located in Havre. It also was presented last month at the 9% round, and they are requesting a $2 million, $225,000 loan.
Good afternoon, board members and Chair Posey. My name is Becky Brandborg with Echo Enterprises, and I appreciate the opportunity to speak with you again about Mountain Goat Court in Havre. Because this project was already invited forward in the 9% letter of intent round, I'm going to use my limited time to focus on why this project matters right now. The safety net for Havre senior housing is under distress. The board is already aware of the challenges facing Eagles Manor in Havre. While that property is separate and unrelated to Mountain Goat Court, there is an important local connection. Havre Eagles Manor is an 83-unit senior housing property serving elderly residents and people with disabilities. The property is involved in bankruptcy proceedings. Its future operation is uncertain, and it has experienced vacancy and operational challenges due to its deteriorating physical conditions. Mountain Goat Court is not the sole solution to Havre Eagles Manor's problem. 30 new homes cannot solve every housing problem in Havre, but it would be a mistake not to connect the dots today. If an existing senior housing property in Havre becomes unstable, or if the residents are eventually displaced, where will they go? With local housing choices already scarce, affordable alternatives are virtually non-existent. Havre is a rural highline community of fewer than 10,000 people. While it is not located on a reservation, it serves as a regional hub for the entire Highline, including nearby tribal communities and native residents who rely on Havre for services, healthcare, employment, and housing. Havre does not have a local housing authority that could step in to assist. It is a small rural community with very few local funding tools available when a housing need becomes urgent. Seniors in our rural communities cannot simply absorb that kind of disruption. Mountain Goat Court gives the board a chance to add stable senior housing capacity before this situation becomes a crisis. It's not a reaction after displacement. It's a practical preventive step before displacement. The site and design we are proposing for Mountain Goat Court are both practical. Residents will be on the HRDC campus near bus service, food bank, LEAP services, volunteering, and social connections. The homes are designed for seniors and people with disabilities, with 1 level, 0 threshold entrances, accessible kitchens, walk-in or wheel-in showers, front porches, patios, walking paths, and garden areas. The financing reflects a real local partnership. HRDC is donating the land, but more importantly, HRDC is not just handing over the deed and walking away. HRDC will be a partner, the co-general partner, and the long-term owner of Mountain Goat Court. That matters because Havre's already seen what happens when senior housing becomes fragile and uncertain. Mountain Goat Court's being built with local stewardship from day one. owned long-term by the same organization whose campus, services, and mission are tied directly to the residents. This is how we build senior housing that lasts. Mountain Goat Court is not the biggest project before you today, but for Havre, the High Line, and the surrounding towns, it's quite a big deal. It creates 30 new affordable senior homes. It supports seniors who want to remain near the people and services they know and love. It strengthens housing capacity in a community with limited backup options, and it responds to a local senior housing system that is already showing significant signs of stress. This is the moment to add senior housing capacity in Havre, not after the residents are displaced,
1 minute.
not after the options are gone, and not after the problem becomes more expensive to solve. We ask you to support Mountain Goat Court and help make these 30 homes a reality for seniors and people with disabilities. Thank you for your time.
Thank you, Becky.
Thank you, Chairman.
Board questions. Any questions for Becky from the board? Again, understanding we saw this project less than a month ago.
That's right.
What position will this loan be in? What lien position?
I'm going to call on my consultant to this project, Gene Lure with GL Development. He is my consultant for Echo Enterprises.
It'll be in first position, Bruce. It's the primary permanent debt.
That's what I thought. Just wanted to verify it. Thank you, Jim. By the way, good afternoon. We haven't heard from you yet today, so.
Yeah, well, I appreciate your action on Skyview. You know, the other thing I'd draw your attention to in the chat room is the mayor of Havre, Wade Bitts, was available earlier to testify, but left an extended note in the chat room, given the city's viewpoint on this project.
For Cheryl to read.
Yeah. Cheryl, do you have that to read?
You bet. It says, Dear Chairman Posey and Board of Housing Review Committee, I apologize for not being able to testify in person, but a personal matter has come up. On behalf of the City of Havre, I wish to express my full support for the Mountain Goat Court project being proposed by Echo Enterprises and HRC Council District 4. As I testified on May 11th, our community is chronically underserved with affordable housing, especially for our aging population. This lack of accessible senior living inventory compounds our community-wide housing shortage in many ways, but there is one vulnerability I want to highlight. The 83-unit Eagles Manor facility in our community is and has been our primary resource for independent senior housing. Unfortunately, it was built 5 decades ago under a model that does not serve the needs of today's retiring public well. The Eagles facility was built almost exclusively with studio apartments offering only small refrigerators and 2 burner cooktops. The facility offered a nutrition program for most daily nutrition needs. However, this program has been terminated. Due to these issues and the age of the facility, the Eagles has been in financial crisis, and there is very real concern for the solvency of the facility. To my knowledge, there are no other known facilities in our community that can absorb all of the seniors that currently reside in the Eagles Manor. Please consider funding the Mountain Goat Complex application. Thank you for your time. Sincerely, Havre Mayor Wade Bitts.
Thank you,
Thank you,
Cheryl.
Cheryl. Other public comments? Any other board comments or questions?
Seeing none for public, Chair Posey.
Thank you very much. Becky, thank you. Gene, thank you.
Thanks so
And
much.
we come to the end of our presentations. With that in mind, I will go back to Jason so he can tell us what we're going to do next.
Okay, next we will have the vote. So this one will be a little different than the other one we just did. This one will have each board member list their top 4 projects that will get 3 votes. The next 3 projects get 2 votes. And your last 3 projects will get 1 vote.
So we're voting on a total of 10. And
And you can see the points up there, kind of the middle, center, whatever. You can see top 4 get 3. So, yep. Thanks.
Very good. So board, how long do you need to make your choices? There's 15 of them here. 10 minutes, 15 minutes, what will you need?
I appreciate 15.
Yeah,
15?
15, please.
Yeah.
Okay, then 15 it will be. We will come back at 2:20. If we need a little more time, we'll take it. It's all important, but let's re-adjourn at 2:20. You can go ahead and stop the recording. Okay, one of my top four is Timberwolf Apartments in Kalispell. Large number of units at 216. I like the location in town. Kalispell, based upon what I have been reading, is now the fastest growing. Kalispell, the Flathead Valley, is now the fastest growing area in the state of Montana. My second, or it's not a second, but another of my top four is Saddlehorn Apartments in Miles City. We've gone through Saddlehorn as far as an approval process went. It's in eastern Montana. We've not had much east of Billings. This is a good deal, and this gets it over the, if you would, over the finish line. My third one in my top four is Franklin Crossing in Missoula. This particular project has everything going for it as far as I'm concerned. It's got community involvement. It's a large project, a lot of donated money and land, and on and on and on. This is a really fine project. And my final one in the top four, Glacier View Senior in Columbia Falls. Again, Columbia Falls has not had an award in a long time. There's urgency there because of the infrastructure issue. And I read an interesting article that now the number one mountain town that people should be looking at now is Columbia Falls. I would never personally consider Columbia Falls a mountain town, but apparently in the country it's considered a mountain. So those are my top four. My next two.
Three.
Well, it's the next three of the second tier. Canyon View in Helena. And
Canyon Views in Hamilton, Bruce.
In Hamilton, not Helena, in Hamilton.
Yeah,
Thank you. We're doing rehab, got a large seller note coming back. I just think that's a good project. Then my next two, and I had to look at all the Billings projects and say, Billings can't have all the money, and so where am I going to go with that? And I believe that the two most needy projects in Billings are Towers 9 and Towers 4. I happen to have some familiarity with both those facilities, and they're old and worn, and they need help. And so those are my three in my next tier. And in my final tier, I have the Elms Apartments in Kalispell. It's a low request. There's vouchers to be protected. I believe that's a good project. The Eagles Manor in Helena. Once again, if I can get to all my paperwork here. I'll get it here. There we go. The Eagles Manor, being senior rehab, it's larger units, so combining some buildings. I think that is a good way to go. And then my final one in my third tier, this would be correct, is it?
Yeah.
Would be Mountain Goat. It's in Havre. We haven't done much in Havre in a long time. It is, once again, I am still intrigued by virtue that's 100% accessible. Again, I'm not sure that does or doesn't work, but I'm still intrigued by that. So those are my 10. We'll then go to Jeanette.
Gosh, thanks, Bruce. Yeah. This is hard for everybody. I've massive difficulty for every single one of us today. So I hope you all appreciate this. So my top four, and you're right, I don't need them in any numbers, but I put Franklin Crossing in Missoula at 1. The breadth of the partnership in the city of Missoula is magnificent. We've heard it from every single department there, the mayor, and in Tyson as well. It is a magnificent project. My number 2 is Timberwolf in Kalispell, 216 units. I'm looking at my notes, whatever I made, September construction this year. Great funding stack, 30 years of new life. Number 3, Glacier View Senior, Columbia Falls. And that would be my third one, which was there. I'm trying to find on my notes where I wrote these things down. Well, anyway, that's where, and I know the project really well. Number 4 is Saddlehorn Apartments in Miles City. And that is, I'm going back and forth, a great track record there. They have 8.5 million tax credits in hand, the AMI 47.6%. Yeah, we have heard that one and do know it well. So those are my top 4: Franklin, Timberwolf, Glacier View, Saddlehorns. My next 3 in no particular order is Canyon View in Hamilton. Yes, I do live here, but I do know the property and the location extremely well. It is right within 1 block of the hospital. It is an easy walk to downtown and drive, and it is perfect for this complex to keep growing in the manner that it's doing. I did, like Bruce, both Billings, LB Lofts, and towers. They need rehab. It's time to get it going. We're working with the same entity. I trust to get that done. So those are then Canyon View and the both lofts, or loft and towers. My last 3, I went with Woodward Flats out of Bozeman.
Jeanette,
Yeah.
which there's 2 towers and 2 LB lofts. Did you want to specify which ones?
Oh, I thought Bruce did. So did he go? Okay, then I would go for the 2 9s.
Okay, so you want both the 9s. That's fine.
Yeah. Okay. Yeah, sorry about that one. Thank you
No
for
problem.
that.
That's fine.
Yeah, I'm trying to looking. So in my third tier, I have Woodward Flats out of Bozeman. There's a major contributor by developers. I thought that was very, very good. And from Billings itself, I know this is another Billings project, but they're ready to proceed. They've done a lot of remediation and groundwork. And I did go pick them in the third tier. Mountain Goat Haver. Yeah, I hear Miles City's in a great, or Havers, I'm sorry, in a great deal of trouble with the Eagles Manor going out. That leaves that community with very little to nothing if that should happen. And my last one was Eagles Manor of Helena. Again, familiar with what they've been doing and their 3-building construction. I think that is a good thing.
Jeanette,
Thank you.
Double check my points, Jeanette, just to make sure I got it right.
Yeah, that's, yeah, let me see if I get, okay. Yep, you got it, Bruce.
Okay. Thank you, Jeanette. Rachel.
All right. So last night I wrote some remarks on my prioritization of these projects. And so I just wanted to kind of go over that. I was looking at the housing impact, demonstrate strong feasibility and readiness, supports workforce, senior housing needs, and ensure the geographical balance across Montana. So my first is Franklin Crossing. I appreciate maximizing the public investment and as well as really prioritizing the significant housing shortage in the area. My second is Glacier View Senior, addressing the critical senior housing shortage in one of the high cost housing markets. My third was Mountain Goat in Havre, also addressing the senior housing in rural Montana, and also addressing the Eagle Manor across state issue. Number 4 was North Park 4% in Helena, Helena addresses housing shortage, delivers substantial unit production and long-term community benefit. Number 5 is Timberwolf 4%. Kalispell, critical housing shortage in the Flathead, develops workforce housing capacity. 6, LB Lofts, Laurel Gardens, expands attainable housing in Montana. Billings is one of the largest employment corridors, so it meets that need. Number 7 is Henley 1, 4% Great Falls. Unfortunately, they weren't able to present, but looking through their documents, it just strengthens the geographical balance in housing investments in Montana. Tower number 8, Towers 4%. Billings, I appreciate the redevelopment, and like everybody else has commented, that it's a need to be done. Number 10, Eagles Manor, also a revitalization project, meeting a senior need. LB Lofts 9%. Billings, redevelopment value. Number 12, Woodland Flats 4%. Bozeman has an extreme housing demand, and it provides a large scale housing production. 13, Saddlehorn Apartments. It's rural and it also expands the housing investment. 14 is the Elm Apartments in Kalispell, important project due to the continued affordability pressures up there. And then number 15 is Towers, 9%, Billings, redevelopment, and housing stabilization benefits.
Okay, thank you. Richard.
Rachel, could you just also double check the
Yep.
tally and make sure that we got that right? And I think Bruce only included the first 10.
Oh, okay.
Just double check that and make sure we have it accurate.
Yep, looks good.
Okay. Richard.
All right, so 3 buckets, and these are no particular order within the buckets, and I just did the top 10, but the 3 vote bucket, the top 4, Franklin Crossing, I just think that's a tremendous asset with a lot of opportunity to reinvest in something that we've already got a major investment in that affects people that are living there today. And I think there's been such energy put into that. It's very impressive. So Franklin Crossing, Towers 9, I'm really torn over a lot of these because there's a number of great Billings projects. And I think, I forget whether it was Bruce or Jeanette had mentioned, I'm trying to also look at geographic diversity here as well. So Franklin Crossing, Towers 9, this is in no particular order, but they're all in the top 4. Saddlehorn and Miles City, an area of the state we've not had a lot of investment into for affordable housing. And then also in that top 4 group, the Eagles Manor and Helena, again, in reinvestment in an existing, really tremendous community asset there. The next 3, these would be the ones that get 2 votes each. And again, in no particular order, Mountain Goat, Havre, I think we're dealing with a crisis there, kind of like we talked about with Roundup in the earlier selection process this morning, where you have an existing, just a lot of fragility in the housing market there. There's also a component to the Havre. It's, we don't have any projects this year that are devoted to Native American populations, but
I've gotten the impression from the earlier presentations that this is an opportunity also to kind of provide for that community, which crosses over into Havre significantly. So Mountain Goat, Glacier View and Columbia Falls, again, people being priced out of their own community and needing to stay in their community, and just an opportunity to provide some investment in an area that has not gotten investment in decades from affordable housing perspective. And then, again, that next tier of 2 votes each, Timberwolf. So Timberwolf in Kalispell, an area of significant growth, and also a project that's going to help a lot of people. So it's for me partly, and someone else mentioned this as well, that there's just a lot of units there that are gonna make a big difference for that community. And the next 3 in the next bucket, if you will, which is 1 vote each, the Canyon View and Hamilton. Again, I love the fact that you've got organizations that have come together and are really putting an effort in a small community that has not gotten a lot of investment over the years. So Canyon View, Woodward and Bozeman. I just thought that was a tremendously well put together project with, we're looking for my notes here. Okay. So yeah, we're in Woodward and Bozeman. And the fact that you're looking at below 60% of the annual average income for the district. I feel like there's just a need in that part of the state that well, there's a lot of needs all over the state, but I felt like there's tremendous need there. Even though we've put some resources in the past in Bozeman, I thought Woodward needed to be invested in. And then lastly, certainly not least, and nor by that matter, are those that are not mentioned least, because I thought we have some great projects all around. But the Elms and Kalispell, the downtown rehab element of that is something that is near and dear to my heart, and also provides a kind of an integration with efficiency for the community, that we're kind of rebuilding the downtown area there. That was it. I think I've got all of them listed. Did I do a good job there?
It looks that way to me, Richard. You have them all.
Okay. And I've got to scroll in here to see the points. Make sure I've got this. And the points look accurate. Thank you.
Thank you, Richard. Okay, Ryan, you got to take us home.
Yes, sir. So at number 1, I had Timberwolf. This is based primarily on just the clear, desperate need for housing in Kalispell, and this project has a lot of units that it'll bring to the community. Number 2, Franklin Crossing. I just echo what everybody else said. It's a really cool, innovative project, a lot of units, and really impressive the way the community has come together. The next several, I'll just say that geographic diversity, I think, is a high priority for me. I think it gives legitimacy to the board if we know that we're considering the whole state. And so up in the top tier, still, I have Eagles Manor. Again, another a lot of units available in a place that hasn't gotten a lot of support. And then Saddlehorn, rural community, really targeting a low AMI. So then in my second group, I have Mountain Goat Court, Canyon View, and Glacier View. And basically, again, referring to geographic diversity. And these 3 projects were so similar in scope and purpose, and I couldn't decide, I had trouble differentiating them, so I just put them all 3 in group 2. And then down in group 3, I faced the same problem that everybody did with differentiating the Billings project. They're all worthwhile projects that you could use our support, but having to make choices, I went with LB Lofts, Laurel Gardens. and Towers 9. And then my final choice was the Elms and Kalispell. And again, that's primarily attributable to the need.
Okay, thank you very much. So while Bruce is working his magic again, first off, I'd like to thank all the presenters today and all the work, effort, financial resources, et cetera, goes into it. Secondly, I cannot thank the board enough. The four of you that were able to make the meeting, this was a big job. And I appreciate it. And you took it very seriously. Not that I thought you wouldn't, but the fact of the matter, you did. You gave thought to everything. And that's extremely important. When I first looked at this, I thought, well, maybe I can make all my choices and we don't need presentations. Because I thought the information was pretty good. But I'll have to admit, as Rachel had done, I had made a list based upon what I read relative to what I thought the orders would be. And in fact, some of it changed based on the presentations. So the presentations were in fact a good idea. This whole effort was a good idea. Again, I thank everybody. I thank the staff who's hung in there with us all day. Joe, who's managed to say, no, Mr. Chairman, there are no public comments. This is very rewarding. And now we have a selection, and that is how many units that is, in fact, 9 units are in, and we're going to have a runoff on the other 6. Would that be correct now, Jason?
So, Mr. Chair, looks like we have some tiebreakers at number 3. And I want to ask Bruce, if he adds them up, we should just vote on the ones with 3 points first, because I think a couple of them could get in. Looks like Grace might want to chime in.
Yeah, so it'll just be like last time. We want to make sure that if anything doesn't pan out with the top, what was it, 9, that the bottom one of the top of the bottom 6 can then move up. So that's why we're going to do a tiebreak now.
But we're only going to do the ones that got 3 points first, right? Because looks like 3 out of the 4 of those could probably still squeak in with the 29 million available. And then we would, looks like, leave Woodward, Flats, and Henley both at the bottom, correct?
Yes, I don't believe we would have to do Woodward, Flats, or Henley.
Okay.
Just the 10 through 13.
Perfect. And how should anybody have, do we want to do 2 points, 1 points for their projects on it, since there's 4 of them here?
I think that's the best idea. 2 points, 1 point.
Okay.
Any other thoughts on the board's part?
I wouldn't mind. Just make it, run through this again. How many votes do we get, and how many?
There are four tied at 3. So we're going to break that tiebreaker and move one of those 4 into the top 10.
Well, we could actually probably move 3 out of the 4, possibly, depending on which ones you vote for, could still get in. So we have almost $8 million left.
Well, we didn't vote that way, would be my point. We only voted for 10. So to move them in, that might not be appropriate when we only agreed to vote for 10 to begin with. They will still be in an order.
Yes, I would recommend voting 1 to move up to the top 10. And then I would just recommend voting rank order. So you have 10, 11, 12, 13, and then moving that 10th up to your top 10 as you had agreed previously.
So you would like us on these 3 to vote 1, 2, 3, 4, depending on how we saw it. Is that correct, Grace?
That's how I would recommend it.
Okay. Is that okay with the board?
So we're voting on the Elms, LB Loft, Floral Gardens 4, Towers 4, and North Park 4. Each board member is giving 4 votes. The first one 4 points, second one 3, 2, then 1.
That work for the board?
Yes, would you mind, it's North Park, 1 Towers. Run through those again, Cheryl, because I'm having a hard time seeing the screen.
Yep, it's Elms Apartments 4%, LB Lofts Laurel Gardens 4%, Towers 4%, and North Park 4%. And maybe before we vote, I think Jason and Bruce Brensdell maybe just having a quick sidebar to make sure that if we do a voting 4, 3, 2, 1, that we won't end up with additional tiebreakers, or if it makes more sense to do a vote for 3, 2, 2, and 1. I just don't want us to end up in another tie-breaking situation.
And you don't have to vote for each one. I mean, that's what I'd ask first, if we just wanted to do 2 for your first one and 1 for your second one, and then you wouldn't even vote for the other 2. So, but I could, it probably doesn't matter. I mean, however you want to do it and see how it works out.
I think
I just wanted to say, I'm not sure what this top 10 thing is, because we have $8 million to fund. So we're going to be able to fund more than just 1 out of these next 4.
Yeah, so I think that's why we need them all to be
Yes.
voted on, so then they become in true stack order. So if any of the projects above fall out, we will have additional projects we can go down to.
Yeah,
And we may need
but
to go down more
well, we're
than-
going to be funding probably 3 out of these 4. So it's not just funding 10.
Yeah, so Grace, we want to end up with all 15 of them in a rank order, even though we just had them vote on 10 initially, because we want whichever number is not able to be funded, those need to be in a priority order.
Yes, just in case something happens with one of these projects, we want to be able to, or multiple of the projects, in case 5 projects fall out, number 15 ends up being able to be funded.
Yeah. So then do we have a strong preference with 4, 3, 2, 1, or with a 2, 2, and 1? We'll still have to do probably another vote for the remaining order of the ones that don't get past the tiebreaker. So this is really the tiebreaker vote to see which ones are in the funding.
Well,
Go ahead. I think 4, 3, 2, 1 would maybe serve us well.
Okay.
Thoughts from the board?
So I'm a little unclear. I'm actually not sure which one, what we're doing. And to be frank, I'm a little unclear. Are we voting on all of the ones that at this point are in again, or just those 4?
Nope.
Just
Right
those
now
4
we're
highlighted. Just
Just
those 4
those
highlighted.
3.
They all tied.
Okay, 11, 12, and 13.
10,
What about-
11, 12, 13.
Okay, 10 isn't highlighted, that's all.
It's in a square. Yep.
Oh, okay. So it's those 4. Okay,
Yes.
there you go. Okay, so we're making just one vote on?
You're going to vote your top project 4, your next project 3, your next 2, and your
Okay.
final 1.
Okay, I see what you want us to do. We're gonna vote on all 4. Okay. Okay. Well,
Board understand?
Yes.
Okay. I'll start it off. Towers 4, 4. Elms Apartment 3. LB Lofts Gardens 2. North Park 1.
so 3, 2, 4, towers. So Bruce, you voted on the 2 towers and that gave them 4?
No,
Towers
No.
and lofts,
yeah, 2 different projects.
right?
So my first choice of these 4
Okay.
is the towers.
Okay, towers 4.
Right.
Okay.
My second choice is the Elmo Apartment. Third choice is the lofts, and 4th is North Park.
So it's my turn.
Unless you'd like us to come back to you, we could do that as well.
Oh, no, no, it's okay. My first one would be Towers 4. My number 2, would be, Lofts Gardens 4. And then I would do North Park, my 3rd, and Elms 4th.
Okay. Rachel,
All right, so number 4, I did Towers, 4%. Number 3 is Elms. Number 2 is LB, 4%. So I think that's the Gardens in Laurel. And then number 1 is North Park.
okay. Richard,
Okay, my first choice for 4 votes is Towers. My second choice for 3 votes is the Elms. Third pick for 2 votes is North Park. And final pick for 1 vote is LB Lofts.
very good. Thank you. And Ryan, clean her up.
I'll do 4 for LB Lofts Little Gardens, 3 for Elms Apartments, 2 for Towers 4, and 1 for North Park.
Very good. That's nice. We have a nice clean slate. Very good. We don't have a tiebreaker again.
But do we still have extra money?
Well, we don't know that one yet.
Oh. Oh, yeah, there it comes.
Bruce will put this in order for us and get the money up, and we'll know where we're at.
Oh.
Bruce or Jason, you want to recap where we're at for the board?
Yeah, I can do it. So we've got the 1 through 9 that are fully funded. We've got in our tally 2 projects 10, 11, and 12 that are funded with a very minor shortfall of $25,000. You know, I think that's immaterial enough to we could probably say we could fully fund at 5 million and just you know, because we have money coming back in over time anyways. So
Yep. And yeah,
And then do we need a tiebreaker vote for Woodward and Henley to complete the stacking order?
no, they had different votes.
yeah,
up
they
there
had
at the
3
top. They
and
had 2 and 1, so that should be the order they come in, I would
Okay.
believe.
Perfect. Okay.
I'm going to put those back in so they actually show that.
Okay.
Okay, so I need to get the motion ready, so bear with me 1 second.
Nope. We're fine.
Yep.
It reminds me of being in Washington, D.C. and working the Hill all day.
Oh, shoot. Take these out. So I think that's the slate and that's the motion.
So Bruce, when I look at this, we're able to fund everything down through 12, is that correct?
Yes, that is correct. Fully funded.
Okay, that's, and so we have 3 projects in the wings, not funded at this point. Okay.
Yeah.
All right, let me read the motion. Motion to approve the following rank ordering of projects, applications for the Go Housing HMF, Montana Board of Housing HMF, Montana Board of Housing MLF loan programs. Those being Franklin Crossing 4%, $5 million. Timberwolf Apartments 4%, $2 million. Glacier View Senior approved $2.3 million. Saddlehorn $1,450,000. Eagles Manor $2.5 million. Mountain Goat $2.225 million. Towers $1.3 million. Canyon View $2.25 million. LB Lofts $2 million. Towers 4 $2.5 million. Elms Apartments $500,000. LB Lofts Laurel Gardens $5 million. By this motion, the board directs the staff to move forward to underwrite and approval. Staff is authorized to finalize underwriting, complete self-level approvals, make all the loan commitments pursuant to the above rank ordering of projects. Additionally, board grants flexibility to staff to assign specific sources of funds between the 3 programs listed above. Do I have a motion for approval of that motion?
This is Ryan. I'll move.
Thank you, Ryan. Do I have a second?
I'll second. This is Rachel.
Thank you, Rachel. It's been moved and seconded. All in favor, please say aye.
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 Opposed, same sign. Motion carries. Jason, back to you. Got anything else for us?
I have absolutely nothing else at this time. I don't think anybody wants me to, do they?
No, not really.
Okay. 5 after 3. Not bad. Once again, thank you all. Yeoman's work. It's going to be a lot more work for our staff ahead as they go through these 21 projects and proceed toward their ultimate loans on these. That having been said, have a great week. We stand adjourned.
Thank you, everyone. Have a great afternoon. Bye-bye.
Thanks, everybody.
Thank you.
Everybody.